Hello, guys. Hello,
Hi there.
Howard. Hello, Michael.
How you doing?
Hey, what's up, Igor? Howard? Long time no see, guys.
Yeah, very
Yes,
good, very good.
yes. I just missing your strategy, Michael, because you have
Ah,
such a simple and beautiful strategy that I really like to listen over and over.
I appreciate that.
Excellent, excellent. Okay, guys, would you some start from me, or you want to take the introduction?
Yeah, I'm good to I'm
I
good to
can
hear.
grab it.
Yeah, you want to grab it? Go
Okay,
for it, Mike. Go on.
okay, Michael,
Oh, okay, sweet, sweet.
you can
Awesome,
share your
awesome.
screen.
Oh, yes. Yeah, yeah. Okay, cool. So I'll go ahead and share my
Yes,
screen. Just a small position today. I don't really like to trade too much on days. Like, I don't do great with those days. Right? Because it's a little wacky for me. So I tend
yes,
to not go as heavy, but I am in this EG shorts right now. I'm only got a 0.5% on here, but this is my A1's A plus setup, guys. Like super nice, solid setup. As you were just mentioning, Igor, you guys
yes,
already know this is my market maker structure that I just really abide by and just follow as much as I can, right? And just as I always point out, I'm only really interested in two levels, which would be, let me scoot this over a bit. I'm only interested in level one of the setup or of the structure rather, which would be here. And it's this retest of this area, right? So if this trying to retest this zone, I'm interested in shorts here. And then the same exact thing here. The break and retest with the market maker structure, right? So same thing. I'm just interested in these particular two spots on the chart. Nothing more, nothing less. I'm not interested in anything else on the chart. I stay away from, for me, this is what I call a peak high. I don't like to trade the peak highs, and then I don't like to trade the peak lows either. Because for me, this is on the fringes, is what I call it, and it can technically just keep going, keep going. I'm looking for that break of that structure and that retest, right? For me, this is level one. So I'm looking for 50, whoops, 50 EMA bounce. And then again here on in level two is the same thing, except I'm looking for a M or W of the 200 EMA. Typically it's an M or W pattern. There are it's slight variations to the theme. It could be an M or W, it could be a half a bat is what I call it, or it could be a head and shoulders pattern off the 200. But more or less, it's a pattern off the 200, and it's pretty much broken up into those three categories: M, M or W, excuse me, half a bat, which is kind of broken up. So it'll look like this. I'll just draw it really quick. It'll look like the regular M, right? Where both of these kind of match up together, leg one and leg two match up together. It'll be a second one where the first leg is high, then the second leg is kind of short, like that, right? In that case, I needed to break below this area. And then the third pattern off that 200 I'm looking for would be a head and shoulders pattern. So you got the left head, I'm sorry, left shoulder, head, and then right shoulder and kind of break down, right? I don't care what it looks like as long as it's one of these three patterns off this 200 EMA. So this could theoretically be any one of these. So level two trade is a little bit harder than a level one trade, just a little bit. Um, but theoretically, it will be one of these three setups or patterns rather in this zone, right? So once it breaks and recesses this zone, I want to see a M here. I want to see a half a bat here, or I want to see a head and shoulders pattern here. And I got a few examples to kind of point that out a little bit later, but just kind of getting back into everything. I'll erase these. So the reason I took this trade today is we have a level one. Oh, I'm gonna get off of here. Okay, there we go. The reason I took this trade today is we have a beautiful level one trade, which is the 50 EMA bounce, right? So if you can see, we got this M top, which is pretty much exactly what we have here. Right, this M top, we have this break below, and we have this retest of this structure and drop. This is the move that I'm expecting to happen, which is the same move that's right here. The same exact move, right? And it's no coincidence that out of all places, if you really look at it, price retested the same exact area. I can't make this up. This is the break and retest right here. Right, like this is nearly as solid as it can be. And simultaneously, so everything at the top, as I always mentioned, is the chart. And then at the bottom, I have like this indicator. It's called the TDI, which is the Traders Dynamic Index. And in essence, I just want to make sure that the market baseline, which is the yellow line, is below this dotted, what I call static line. And as you can clearly see, it is. This yellow line is below this. So I know I'm good for shorts. So that is pretty much the only setup that I have today. As you guys can see, it's kind of coming back against me a little bit. But this is expected. Obviously, my price is in at, what's my price? I'm in at 35. So
okay. Is it a day trade, or are you hold over the weekend, or what do you normally do?
Definitely a day trade. Yeah. I if anything, I'll swing trades for like a day or two, but I literally never hold trades over the weekend. Like I don't want to get gapped.
Yeah.
So I never hold them over the weekend.
Cool.
And this actually isn't a huge, like, great setup. Only reason is because my targets are 200, obviously, but this is basically a one for one. A lot of the times, this will be a 1 for 1.5, or a 1 for 2, 1 for 2.5. So not the best, but definitely not the worst. And again, this is my A+ setup here. I love them when they come off the peak like this. We got you can easily spot this again because you have this 1350 cross. Once this 1350 crosses, I'm looking for a small run and just the first pullback to the 50 EMA, right? Once it closes below this 13 EMA, you're in here. And I was a little late to this because technically you could have took this at 6 a.m., which I was not up at 6 a.m. I don't really get up till 7. So when I seen this slight pullback, I tried my best to get in, as best as I could. But yeah, target's definitely this 200. And then just to kind of show you guys, like I kind of already drew up with the level one. This is the level one trade, which is the bounce to the 50, off the 50, targeted to 200. The next thing I would kind of be looking for would be something like this, right? Price is going down. I'm looking for this 200 EMA and this 50 EMA to cross, right? Once these two cross, now I know I'm in level 2. That's that other picture that the other setup, because I'm only trading level 1 and level 2. So this is level 1 when the 1350 crosses, and then this would be level 2 where the 5200 crosses.
Yeah.
Right. And then at this point, I'm looking for a nice M pattern off this 200 EMA to continue to go short. And I'm only taking these two setups, this one here and this one here. That's it. Yeah. Once it gets down.
Yeah. So I guess the first one is kind of like you've got a reversal of trend and you're selling the first retest. And the second one is you've got a confirmed trend and you're selling into the bounce kind of thing.
Exactly. Yeah. And this is why I don't try to take this peak, because once this 1350 crosses, this pattern for me is locked in and it's now short, especially with the market baseline below the static. So once we get that change in character from here, that's kind of just bouncing around, because this could do this all day, right? Yeah. This could literally do this all day long. And we've seen it do it plenty times before. I'm not interested until it breaks all of that, retest it, and then drop, right? And I want to take this move. This is the first move that I take.
Cool.
Right. And that's literally, guys, why I don't take peak trades, because it could do this. It could chop up here for days. You got to see. Let me show you something. Silver did this last week. And then it finally broke the trend. Right. Just look at this. Same exact setup. Same exact setup, guys. If you check this out. 1350 cross right here. Right. We had this funny structure at the top. Right. We got the small run. First pull back to the 50 and it drops. This is magic. This is my number one setup. But after this, remember I told you the next move you're looking for is the 50 and the 200 to cross to take the M off the 200. But what do we have here? This thing chopped for days from the June 12th all the way until June 17th. This is 5 trading days that it just chopped up. Couldn't even do anything about this. So you don't never want to continue like how I take the very first time the 1350 cross, and then the run, the first bounce off the 50 going short towards the 200 is my target. You can't take the rest of these though, because this ends up happening sometimes. All right. Now, if you can see right here, this doesn't count because there's no pullback to the 50, right? We got a 1350 cross. Yeah, but there's no pullback, no run and a pullback to the 50. Hence why the next move here would be, as you can see, this 50 and this 200, they're trying to cross now. Right? So that would be the move, or the cross, and then you want to see price do something like this. M structure, short. This is the next move in the cycle. Level 1 move, level 2 move, and that's it. That's it. That's it. That's all. I don't care about nothing else that happens in this structure. I only care about these two. Right. But yeah, this is a great example of why you cannot take the second and third and fourth bounce, because you would have tried to take this 1 time, 2 times, 3 times, 4 times. You would have tried to take this 4 more times, and it never worked out. Yeah. Why?
You know what they say. Well, they say you can only go to the well so many times, huh?
Yes, yes. You go to the well 1 time, which is right here, the first bounce. That's it. You don't go to. There's no coincidence, right? Once again, I can't make this up. There's no coincidence that out of everything that's happened, as soon as this 13, this price closed below the 13 here, this huge candle, and 1 candle, boom, you made your money. 1 candle.
Yeah.
You
so
enter
you
here,
got to be. I guess you got to be pretty kind of on it to wait for that, because that can happen very quickly.
It can. It can. So for me, as soon as the 1350 crosses and I get that first pullback, as soon as price touches the 50 EMA the first time, I'm setting an alert. I'm an alert person. I will have 13, 14, 15 alerts on going at one time on my trading view, because I don't want to miss anything. And it actually works out great because, I mean, I got the Apple Watch, so the app on my phone, so it'll just alert me. I'll do something like this. Just do it here. Yeah, I'll just put in my message, I'll just put, what type of setup this is. So I might say, hey, this is the master trade, right? So then I'll just put the alert on there. And when price does touch this, it comes to my watch. And I basically tell myself, hey, the master trade is setting up. I just come back to my charts and I can see it. But yeah, so getting back to EG, which is the one I'm in now. Yep, same exact setup though, guys. I'm gonna take all of this mess off the screen. I'll leave this one on though. I'll take everything else off. All right, sweet. Yep. So this is literally, as you guys just showed you on silver, the exact setup. For me, it's only, I think I might have pointed this out, but I classify all my trades. So I have 5 setups, right? One is the master trade, which this is a master trade. And for me, this is an A trade. That's exactly what this is. It's the master trade. My next setup will be a combo trade. This is also an A trade. My next setup is what I call an ID50. This is the only trade that I take off the 15-minute chart. Next up would be my M or W. Whoops, M/W. Oh, that's ugly. Off the 200. Now this is a B trade. That's a B trade because it tends to come back sometimes, and then it'll make this last setup I have, which is the money trade, and this is also a B trade. So obviously all of these have different characteristics depending on what it looks like. Yeah, they all have their own criteria, own rules, all of this good stuff. And yeah, when one of these in that pattern that I drew, right, that market maker structure, it'll always, every one of these trades that I have will always be in level 1 or level 2. That's it.
Gotcha.
So I'm really just identifying which setup this is, and I'm applying my risk appropriately from there.
Cool. Sorry to interrupt you. Sorry to interrupt. I can see a question come through about. Could you see the question there about gold?
No. Let me take a look at it.
I can read you. Does he trade gold?
He trade gold?
Yes.
Yep. All right. So absolutely, I do trade gold. Let me show you a great example of this working out on gold. I took gold last week before, I want to say. It was a W. It was a head and shoulders pattern off of the 200 EMA right after the 5200 crossed. So let's check this out. Where is this? Okay, so it wasn't last week. Oh, here it is right here. All right, so remember, once the 5200 crosses, as I showed earlier on the diagram, I'm looking for a W, a half a bat, or I'm looking for a head and shoulders pattern. And look at this. If this isn't a head and shoulders pattern, I don't know what it is. Left shoulder, head, left shoulder, run up. I smashed this trade actually. Not hit it a little bit. I smashed this trade. This is like textbook, especially off the 200 EMA. So I love to see these moves. But yeah, once this closed here. Now, the only thing that was off with this one is I typically don't trade Sundays, but I've seen this the week before. And I was looking for, let me zoom in just a little bit. I was looking for a break above this little area here, which this candle gave us right away. And I remember this specifically because I got in at 33.06 was my price. So I waited, it's closed. And I waited for a slight pullback. And I entered right here at 33.06. Boom, right here is when I bought this. I went long right here. Let me change the color on this to keep it congruent. All right, cool. So yeah, literally grab this trade right here. And you got to put your stops below the last swing point, which was here. This is a nice 2% trade. I targeted, actually don't remember which one. It was either this price or this one. Let's see. It was only 2. Okay, so yeah, it was this first one. This was a nice, and as you can see, it continued to go up like crazily. But yeah, I targeted this blue tracer over here, which is one of the previous day's highs. And that was just like a nice target for me. Nice risking $1 to make $2.27. Absolutely perfect. And this is literally the same exact setup that I take all the time, guys. all the time. As soon as the 5,200 cross, once again, you're looking for that pattern off the 200. One of those three patterns. In this case, it was the inadvertent head and shoulders pattern. Oh, I thought I turned this. I thought I turned this green, but I guess it didn't. But yeah. So to answer your question, does this work on gold? Absolutely, it does. This works on all the pairs, all of them. Gold is, I will say, it's finicky. You kind of gotta be patient with it and make sure you're paying attention, because this thing it could be far away from your price and then it confirms pretty quickly, or you can be in the trade and it goes against you pretty quickly. So gold, I don't step away from the charts too much because it's just so fast moving. I don't do that with a few of them, actually. I don't do that with NQ, US 30, S&P, gold, and Bitcoin. This is why these are pretty much at the top. I don't step away from the chart too much if I trade off one of these, because they just move entirely too fast. Way too fast. And then I actually have another example, guys, of this same exact pattern working out on USD CAD. So just check this out. Once again, 5,200 cross, shoulder, a mental glimpse of this. And then if we go over to USD CAD, same exact thing happened. You can see it beautiful right here. It's actually right in front of our face. All right. 5,200 cross. The next thing you're looking for is that movement off the 200, which we have right here. Shoulder, head, shoulder, drop. This works all the time. This is actually one of my favorite setups, is to take the head and shoulders pattern. Right off the 200. I can't even make this up. It just works like this. But yeah, that is pretty much it for me for now. Just a quick little intro and see what I got going on. Let's take a look at EG. Is it going against us? What's happening over here with EG? Yep, so we're pretty much right back at break even. So we will see. And again, I'm half on this position. As I mentioned, I don't like to trade too heavy on the day after holidays. So I know we were off yesterday for Juneteenth. When the States, it was a U.S. holiday. So just like to take it easy, especially on Fridays. I do trade Mondays and Fridays, but I'm a bit more cautious because for me, that's the trap move. They like the trap traders on Monday and Fridays. So I try my best to stay away from that. And when Tuesdays, Wednesdays, Thursdays are like my prime days, so to speak. But yeah, I saw my A setup, which again is the master trade. I gotta take it. It's per my rules is I have to take my A+ setups. And yeah, guys. Any questions on any of this before I pass it to one of you guys?
Cool. Looks pretty good to me.
Excellent. Excellent.
Yeah.
Awesome. Well, yeah,
cool.
If we got any more questions or anything. Hey, what's up, Robert?
Hey, Rob.
I'm on session 1 today, buddy.
Excellent.
Yeah.
So
yeah, I've got a few.
Robert,
I've got a few things going on my side.
Sessions.
Yes, please. Yes, please, Howard. Please share.
Okay. Yeah. Quite a busy day or two actually. So let me just quickly dive in 1 second. So I got a few nice. Trades on the systems the last couple of days. So well, from yesterday, I basically had system buys on the yen crosses. So euro yen, sterling yen, and dollar yen, all three of which are kind of doing okay, and the trades are still running, and they'll be running until close to the end of the day because they've got a time limit on them. And Bitcoin was one which I picked up this morning. Let me just quickly go through some of these charts. So the Bitcoin one from this morning was one of the components of one of my systems is a narrow range breakout, where I wait for the market, the volatility to contract like it has done. Yesterday formed a very narrow range for Bitcoin. So it literally just jumps on the breakout, and that's essentially what it did this morning. So it went long right here. I've taken partial profits at the first calculated level, and the stop loss is now at break even. So it's kind of risk free from here on in. So that's Bitcoin. And going back another day, so dollar yen took a long position yesterday, and it sat through a bit of chop. So it was initially quite good, rallied up, came back to close nearly unchanged, and then a bit of a dip in the Asian session today. But now, as you can see, the dollar yen is starting to break higher. And it's actually a yen move, because there's no big move up or down on the dollar crosses really. It really is kind of like a yen based move. So this is euro yen, where the system, it took a losing trade yesterday, which thankfully I never took because it was in Asia, and I try not to take the trades that happen when I'm sleeping. So it actually went short euro yen here, and then it went down, but then it came all the way back up, and then it did a reversal trade to long. So I came in here and I basically jumped in on the long side when I saw the reversal to long. And then subsequently market hit the first target yesterday, pulled back, and then hit the second target earlier today. And it's still holding that last third of the position. So it went long at 66, call it 75, 75 and a half. And we're up quite big over a big figure on that. And as I say, it closes the position. Once there's two targets. Once the targets are hit, then the rest of it is just held with a trailing stop until the time exit kicks in, and that's usually at the end of the next day kind of thing. So that's euro yen, so still long, and sterling yen, similar kind of picture there, where again, thankfully, there was a losing trade in Asia, 2:30 in the morning, which I didn't take, quite thankfully. So I came in the next day and I saw the reversal to the upside. So I thought, okay, that's it. That's a lovely reversal. So went long, first target, second target, and still long with the last bit, holding it until towards the close of today. So again, just going back to the order book, long at 194.92, and we're up nearly 2 yen on that position. So that's not too bad. So it does seem to be a yen-based move. It really is kind of like across the board. It's all about the yen. So let me just quickly present my screen on the platform. So just 1 second. Okay, so this is the kind of trading platform. Yeah, so these are the kind of positions I've got: sort of long euro yen, long sterling yen, long dollar yen, and long Bitcoin. And the stop is at break even kind of thing on the Bitcoin, and on the other ones they're better. So it really is all about the yen. And so let's kick it off with sterling yen first of all. So this is the weekly chart of sterling yen. So long term, we're in this great big trading range. Of recent, we can see that there is a kind of strong bullish bias, because if we go back 1, 2, 3, 4, 5 weeks or so, we had that kind of hammer, kind of bearish looking inverted hammer type thing, which normally would be a bit of a sell signal like it was here, but it tried to break down but snapped back up again. The buyers came in and up it goes. Same again this week. Market goes higher, they sell it, comes back down. Next week they try to take it down, but again the buyers step in at the low of the hammer. Boom, up it goes again. So you can see even last week it opens here, trades down, snap back up again. So people are buying this market at higher and higher prices, which usually is a bit of a precursor to a breakout to the upside. And that looks like what's kind of happening here. It looks like a bullish consolidation on the daily. We go to the daily chart here. So this is sterling yen. So here's the swing, and this to me looks like the correction. Could be a triangle or something like that if you're looking at price patterns on the daily chart, but certainly a kind of a trading range which is continuation pattern. and I think we're kind of on the verge of this big move higher on the yen crosses. So that's sterling yen. Just looking at euro yen, which is kind of its big brother or big sister, whatever you want to call it. So euro yen, euro yen has been kind of leading the way a little bit. Same kind of picture on the weekly chart, where it made an important high going back here in the last summer, came back down, but we've been in a trading range ever since. But again, as with sterling yen, we had this attempt at kind of topping out a few weeks ago, here and here, but the buyers stepped in at the higher and higher levels, and here we are breaking higher 1, 2, 3. This is like the 4th week to the upside and breaking through this resistance point. So it looks like euro yen's perhaps a bit stronger than sterling yen at the moment in terms of yen weakness. But yeah, I think the trend is pretty clear on this this particular chart. Any thoughts on the yen crosses, guys? Just quickly before I move on to the next one.
Yeah, they've been a little bit interesting lately, to say the least. I almost took UJ twice this week, but it never confirmed.
Yeah. I mean, it has this. It goes through these periods where it's like it just does nothing for several weeks, and it really is confusing. And you buy the high, you sell the low, but then eventually it breaks out, and then you get some nice moves, get some pretty good.
It's nice for swing trades.
Yeah. Good on the weekly and the daily charts, I would say. Intraday charts, perhaps not so much, in my opinion. Which is why it works well with the system, because the system holds it for a couple of days. So
funny enough, I did take AJ, so AUDJPY. I took that on the 16th for the same exact pattern, the head and shoulders off the 200.
Yeah, no, I think to some extent, I say this on a regular basis, that when the stock market is doing kind of okay, the yen crosses tend to want to move higher. Now, it's not a very strong correlation all the time, but obviously we had a bit of a correction in the stock market lately. But you can see what's going on in the bigger picture for the stock market. This is kind of S&P 500. In that we kind of made the major low, kind of retest, and then pretty much since that kind of retest, it's been up nearly every week since. And that is a good supportive scenario for the yen crosses, because typically when the stock market's strong or going or not falling, the yen crosses tend to want to go higher for whatever reason. So I think a stock market which is not crashing is usually quite supportive for the for the yen crosses. So let's go back again to dollar yen. Quick look at dollar yen. Okay, so dollar yen. You can see we've got this kind of on a daily chart, and for me the bigger picture is still down. I think really as long as we're below this this swing high, but on a kind of a more of a shorter term, we've got this range taking shape where you can see a bit of latent buying here again. So even though the dollar is kind of weak across the board, really, not so much against the yen, because dollar yen seems to be trying to break above this lower high, settle above it, trying to push higher. Maybe it heads up towards the top of this range. So there's definitely some latent strength coming through on this market. Let's just go back to the weekly for dollar yen, which by the way, I still think has formed a major top, going back to last summer. First leg down, correction higher, next leg down, and we're in some kind of correction of this this move down, I think. So we just chop, make in a trading range. I think eventually we break down, but for the time being, seems to be quite supportive for that. So yes, so for me, I think the big play at the moment for me is being long the yen crosses at the moment. I'll come back. We'll talk about the other currencies a bit later. I'll hand it over. But right here, right now, they're my kind of current trades. Short the yen against the euro, the pound, and the dollar, and long Bitcoin based on that that breakout trade that I took this morning. So I'll hand it over to you, Igor, and we'll talk about some of the other currencies a bit later.
Okay. Just so you guys a little
Excellent.
heads up, I might have a trade set up in the next 10 minutes on AUD CHF shorts.
Fantastic.
So if this does confirm in the next 10 minutes, I'll be able to take this live.
Excellent. Excellent. So first to thank you, Robert, and thank you, Sunarat, for your questions. Robert, you asked the question, which one of the guys holds long, super long trades? I have one NASDAQ trade. Later, I will show you that. But for now, let me just a little bit to give a fundamental introduction, and then we are going to the trades. So what I want just beginning to give some kind of the disclaimer for everyone, actually. It's about this weekend and the fundamentals that we have around last several weeks. First, in this week that just will pass, we know few things. First, all these major players, they keep their interest rates. So either the Japanese bank, either the British bank, etc., US bank, all of them just keeping their interest rate on hold. And what we figure out here is that whenever we get some kind of report related to the sales, retail sales, for example, or services or production, they're bad for every single country because of this tariff war. The US, UK, everyone has the problem with that. And this is why I think the market doesn't react on this kind of the news anymore in a big way as should be. So this is the first problem that we have right now. Of course, GDP for a lot of countries, we have a bad projections just because of this tariff war too. However, if we analyze some things related to the inflation, we can see that we have moderate increase in inflation, which is good for a majority of currencies and interesting for the next moves of the banks. What I want to tell you, and it can be important for all trades that you have, in my personal opinion, is that this weekend can be very tricky. Why? Because maybe there is a chance that America can be involved in the war on Iran. And if that happens, that there is a chance that US dollar can go higher, much higher, and stocks going down, which will shake the market. So I will close my trades on the end of the day, or I will keep few trades or one trade, but I will really reduce my position size just because possibility that this thing can happen in some moment. And now what I would like to do, I will create one trade, and later I will try to describe why I'm doing that. Just before that, I waited just to see the first half hour of the US Open, because I know that price will be better for me if I wait a little bit. So I think that I got better price, but I'm not sure that we will change something in the 1 hour after this. So this is my trading platform right now, and related to my platform, I plan to go long with the British pound dollar. Right now, I will buy, and I will put my stop loss to be at level 344, and my take profit I want to be 357. So this is the in some way 1 to 2 kind of the trade. Actually 1.3575. This is something like that. And of course, on the end of the day, I will either close my trade, either I will reduce the position size as I can. And in the same time, what I will try to do, I will create one more trade. just right now, I will buy gold, and I will buy gold just to reduce the position size like this. And I will describe my stop loss and targets in trading view. So what I will do right now, I will go to the trading view just to show you how I see these trades and why I'm doing this. Howard disappeared. I hope it's everything good with the internet connection. I will be here if there is a problem to put into the stage him again. So what I wanted to tell related to the British pound dollar first. So if I go to the 1 hour chart related to the British pound from the yesterday, we start to go in some bullish momentum. We got a huge, almost 200 pips move down, and after that, everything changed, and now we are again in the bullish mode. However, this bullish strength is not so strong that I would like to see. So this is why I'm little worried about the price action during the Friday and during the next few days. Even I like to see new bullish moves here. The problem is the strength is not so strong, and the same thing is for euro dollar too. However, I put my bullish bearish invalidation point at 1.344, which is a little lower than simple moving average right now. And I think if we keep the price above the levels, I want to see the new highs. One of the important things, here is the Howard, just to add him to the stage. Hello, Howard. Now, what I want to do this 1.357 area. Why? Because it was the point of control where price oscillates a lot during the Tuesday, 7th June. And it's a price that, as Howard like to say, act as a magnet very often. These highs and lows very often acts like a magnet, especially if it's a point of control when you analyze the volume profiles. So I hope that British pound dollar can reach this target and then retest the high of 1.362. So this is why I'm waiting to see how we'll react in the future. So I'm bullish British pound dollar. I'm bullish about 1.344. For euro dollar, very similar situation. Actually, for euro dollar, I'm bullish above 1.148 in this area. Again, little lower the simple moving average, and I want to see this interesting price level at 1.158. Why this level? This level because this was not just the high in few moments. This level was a point of control where price oscillated a lot during the June 17, a couple days ago. It was a really interesting level, and I hope that we can reach this level. If not today, we can reach that Monday. However, I hope that fundamentally we will not have the U.S. interruption in the war between Israel and Iran. If that happens, fundamentally can change everything. So we need to be very cautious related to that moves. Now, the U.S. dollar index, which is color, as you can see, we got a strong.
My bad, Igor. If you don't mind.
Really. Yes, please.
Oh, Igor.
Do you have a trade?
Okay. Yeah. If you don't mind, really quick,
yes.
I want to just jump in it. It's on a EDCHF.
Of course, I will remove. Just give the chart, of course.
Okay, my bad. I'll pass it right back I just want to show this here. Yeah, this trade just confirmed actually. So this candle just closed with this 13. Yeah, this is what I want right here. This is exactly what I want. Now I'm only going to put half of it is on here. Let's move this down a little bit. Yeah, I'll put on half for now. So I just jumped in just now. And let me jump in again here. All right, cool. So this is what I want to be in no matter what right now. But I only put on half my position because I am expecting this to pull back just a little bit. And if it comes and pulls up to here, I will throw my other position on here. So I'll just put a quick alert and just say second entry here. All right. So if it does get to this point, just know I'm going to put my other position on, which this might happen any second, or it might not. You never know. It might just tank from where it's at. But I was looking at this for quite some time, but I was waiting for this second leg. I wasn't quite sure what was going to happen, but boom, we just got one nice red shift candle right in the middle of the session. Now I'm interested in this. And this is nearly a 2-for-1 trade. On the first position, it's about 2-for-1. And if we can get this to pull back to around here, this is almost a little bit more than 2.5. So looking pretty good on this position. I like the way it sets up. We got everything we need, and this might be a good one. So I'm closing this no matter what by the end of the day, because I won't hold this over the weekend. But yeah, I just wanted to show that really quick. Sorry about that. Go right ahead.
Thank you, Michael, for this. Excellent. I hope that you will get nice profit in this trade.
Of course.
So what I started to talk about, yes. I started to talk about the US dollar drop on the June 12th, and after that we started to see the climbing, and everything changed, and we saw the big drop for euro dollar and British pound dollar. But yesterday in the evening, in the late US session, we got this breakout. This breakout below the simple moving average 50 and below my trend line relative strength index indicator. And now the euro dollar and British pound dollar starting to go up again. And from then I'm bullish, the euro dollar and British pound dollar, and I have this bullish bearish invalidation point. So everything is aligned. I hope that the US dollar will keep below simple moving average 50, and I hope that euro dollar and British pound dollar will go up. So this is my setup related to the US dollar index. Now, as you saw, I created a trade for the gold, and I just want to describe what's happened here and why I did this trade. Actually, if you see, we got on Friday the peak, the highest high for gold. And the last Friday, we started to go down. And it was the down move, and the whole time we're down. And several times we approached with this trend line that I just drew. And times we tried, but we didn't break this trend line or relative strength index. And in one moment today, just 1 hour before the US Open and the opening range, we made this strong, really strong pullback, but the pullback was really small. And I entered into the trade. Oh, here at 3,340. So this is the low. The previous low is low for my trade. And what I'm trying to target is this level here. It is the point of control of the June 17, when price oscillate a lot here at the 3,417. So this is my target. Actually, I will just put this is the 1 to 1.5 risk reward ratio, but I think it's a good setup when you have this 1 hour daily candle that we have for the gold. So this is my two trades. So I'm bullish gold and I'm bullish British pound dollar. And I'm as a bullish euro dollar too. I pick British pound dollar because I think that momentum can be better. And like Michael did the euro British pound short trade, and I think too. I think that the British pound is stronger than euro, so I think that the British pound can achieve faster the high than euro. So this is everything aligned and everything in the right move. What I wanted. Right now, I see a little pullback of the British pound dollar down. It didn't start to go up, but above a simple moving average, and I hope that we will keep up and that we will today start to go up again. Maybe we test this blue trend line here. Maybe 10 pips we can go down, for example, and then I hope that we will start to go up. So this is the plan for the British pound dollar. And then I'm going to the NASDAQ. So NASDAQ is the strongest indices today. And I just want to show my missing trade today, which is I'm a little bit sad because of that. But I will tell you how this trade was really, really perfect. But yet the only problem was that it was in the morning and I didn't check indices often. In the UK early morning, I do not do that very often. So I made the trade by accident. So what's happened here? NASDAQ from the June 16th, and we got a bearish trend for the NASDAQ. And we can draw this trend line. This is the weekly 2, 3, and in the fourth attempt, we break that. And we break that early Asia session, late US session in that moment yesterday. And what's happened? We break that, go a little bit higher, then we back again to retest the trend line. So look this, perfectly we retest, touch the trend line to the pip, and then we started to go up. And I missed that entry point. It was exactly on 50 relative strength index. It was exactly touched this pivot point. It was exactly on the end of the UK Open. So when the UK Open, that first hour of the UK Open market, we touched the level in the same moment, and then we started to go up. So I didn't catch that level, and now I'm of course outside of this trade. Now there was a question from the Robert. I just wanted to answer his question. Which one of you guys holds long, super long trades? So on one account, I have a super long trade, and I will show you that. I will go to the daily chart, and that would be 500, not NASDAQ, actually, but the same story, the same setup, actually very similar level. What's happened there? So we got almost 20-25% drop during the April, and this drop was so high, and it is something uncommon. So usually in a few decades, in one decade, you will have at most 5 opportunities for this kind of trades, that you have a drop of a 20-25% of the whole stock market. And when that happens, it's really smart to make a good buy trade. What I realized related to the S&P 500 was this moment. It was this moment in the end of the April. somewhere here at 5,390 level, I spot this relative strength index breakout, and I entered into the trade actually after the retest of that level. And now I hold this trade, and my plan is not to close ever. So I just want to see if it's that possible, because if the markets start to go up on the end of the year and I do not touch this level, I hope that I can try to hold position forever. I just want to see how that looks like, because this is for now my oldest position, because it's a position from the 2 months ago, and I would like to hold it even 5 years if I can. So I know it's a little bit crazy, but those are indices. There is a chance that we can see a higher price without drops, and that I can hold this trade for a long time. So this is the S&P 500, my long-term trade. For NASDAQ, like I said, I just missed this. Try to catch the NASDAQ during the US Open, which is excellent strategy. But sometimes market will give you opportunity even during the UK Open, and I just missed that opportunity. So for this part, these are my setups that I watch, that I want to see what will happen. Of course, what I watch too is the US dollar CAD. US dollar CAD is interesting because we just minutes ago we break this bearish momentum. So maybe can something be here, but actually it's a little bit too high for me to buy from this level. Either that we break this bearish trend line. I think that really this is too high price, and if I want to buy US dollar CAD, I need to wait some better price. And actually I don't believe that US dollar index will be so strong today. Maybe during the weekend and after the weekend, but right now I don't see that. Actually I'm long British pound dollar and gold, so it will be the trade that it's not aligned with my basic idea of all trading. And just to share opinion about Bitcoin, there was one beautiful moment. It was early morning. It was 6 a.m. on my time. What's happened here? We had a low for Bitcoin. That low was the June 17, Tuesday, and we started to recover little bit by little bit, and we got one attempt here on the 19 Thursday yesterday. And what's happened today in early morning, we retest the trend line again, and that was perfect moment to try to enter into the trade, and maybe to try to target like this level at 106, actually $107,000, which was the point of interest during the June 17. So actually right now we are a little bit weaker. Of course, I didn't enter into nice level, so I'm out of this trade. But there was one good opportunity that I missed, just because of it was a really early morning on my time, and I didn't see that. So for this part of the session, I finished. And guys, if you have some setups, or people, if you have any questions, you can ask, and we will try to answer. So this is the for this part of the session.
Yeah.
Nice.
Michael, how is going?
That EG trade is actually coming back. It's kind of
nice.
Actually, both of them are. The EG trade is coming back. I'm going to go ahead and enter the second position on this AF trade, because it's actually at the 13. And let's see. This is expected. This is exactly why. Let me share my screen actually. Yeah, this is why I said I would put half my position on, because if it pulls back to this price, not on EG but on AF. Where they? Oh, here it is. Yep, this is expected for price to pull back right to this point, right here. They like to close and then pull back to the 13 EMA and then drop, which is why I said I'll wait to put the second position on. So
Yes, we lost Michael by accident. Something sometimes happens. The wrong button.
Yeah, it happens. It happens to me quite often.
Yes, me too. Me too. If you want to share something while Michael back.
Yeah. Let me just quickly dive in, and then when he comes back, he can jump in. So just to let you, we're getting close to my next target on dollar yen. 1 second. Okay, hopefully you can see the screen here. System orders. Okay, so the first target actually on dollar yen is 145.88. So we're literally a few pips away from that. So that will be the first place I take profits on the long dollar yen position, which was kind of entered yesterday, really. The system's still long sterling yen and euro yen, but the expiry for the trade is the end of the day. I've got some pretty good open profits on those trades, so I've taken those two off manually. So sometimes it is good to kind of interject a little bit with the systems and do something manually. Also, I think the way that the euro dollar and sterling dollar cable are acting in the short term is that they're struggling a little bit. So maybe there's a little bit of dollar strength that we see going into the end of the session. So euro dollar, for example, is kind of struggling up here. It's kind of, you might argue, it's made a bit of a double top on the intraday chart. It looks like it's struggling a bit. So maybe euro dollar comes back a little bit. So for me, that kind of says, well, dollar yen could be the fast lane on my yen crosses trades. So the one I want to keep open going into the close is dollar yen, not the other two. So I'm looking really for dollar yen to hit that target maybe in the next hour or so, and then that'll be like take some profits on that position. Bitcoin, the stop is at entry price, so it's come back quite hard. Maybe I'll end up getting stopped out at break even on the rest of it, but the stop loss is there anyway. So if the market bounces from here, then happy days, but it could come back, take the stop out, and then we walk away. But that's just the nature of the beast sometimes. But it does look like on the in the short term, it looks like euro dollar and sterling dollar are struggling a bit. So maybe, even though I'm longer term, and I'll come back to that longer term idea, that is that I'm really bullish. But for now, for today, it looks like maybe we're struggling a little bit. So so for me, there it is. It's just been hit. So yeah, just hit that first target on dollar yen. So profits have been taken on a third of the position. So that seems to be where we are right now. So yeah, I'll hand it back over now. So.
All right. Sorry about that. Not sure what that was. Go ahead and share this. Here, these both are. This is the irony of trading Friday. Like Fridays are so wacky sometimes. So I'm slightly out on this one on EG. Luckily, it's still early. We got plenty of time on it. And then this AF trade, which is really the one that I want to go. This did pull back to that 13 price. So I did hit that button on there, and I did take a second position. So I'm actually in here twice, down a little less than 0.1% on it right now. We'll see how it actually goes. I'm expecting this to drop, and I did, again, anticipate this slight pullback. They love to close, come back and retest the 13 EMA, and then drop. Once price gets to about here, and this is something else that I like to do too, guys, to kind of keep what I like to call keep a pulse in the market. So once I get in, I like to set these 4 alerts. One is just like saying, hey, this is coming back. It's like going against you at this point. So maybe I'll come back and look at it and make decisions, but technically I'm not supposed to. I'm supposed to just leave it alone until it closes back above the 13 EMA. And on the TDI, my second exit trigger is for the RSI line to cross back up past the signal line. So I need both of those to happen for me to exit the trade. Because what could happen is I might get a close above the 13 on the chart, but the TDI says, no, it's not time to close it just yet. Or vice versa. I could get a cross above on a TDI, but the price is still below the 13. So I need them both to agree for me to get out the trade. But if they both happen, I'm out of it, like automatically. I'll just close it. Because at that point, it could literally go the whole other way, and I'm just holding on to a loser at that point. So I would just let it go. But as you guys can kind of see, it did literally come right up to this 13 EMA, touch it, just give it a little kiss. Now it's trying to go back down at this point. So again, real time, why exactly I split my positions up into 2. I'll take the first one with half my position because just in case it doesn't pull back, right? It's not guaranteed that it will do that. And I don't want to miss the run, right? So I always split my positions up. I'll take one as soon as the candle closes, and then I'll take the second one that's the slight pullback. Yeah, I do got this alert on here that says AF coming back. Just in case it does start coming back, I want to see it if I'm not in front of my screen. And then secondly is the stop loss hit. So if it does get to this stop loss and I'm not in front of my charts, I want to just know, send me a message. And then I'm going to move my stop loss to break even and normally take off partials at about this price here. And then lastly, of course, I got I say stop loss to break even. This is supposed to say TP hit. And I like to use the trading jargon, just saying TP smack. This is what I normally put. TP smack. And yeah, I really don't have to even monitor this throughout the rest of the day at this point. Like, there's no, I'll look at it at the top of the hour. So like 11, 12, whatever. I'll always monitor it from there. But in between an hour, I just always would know with these 4 EMAs based off, where we actually are in the cycle. So yeah, that's that on AF. And then coming back to this EG, I see we're down a little bit on it. Yeah, it's kind of being a little funky, just a little bit. And I might go ahead and close this, actually. Yeah, I might go ahead and close this. So this is what I mean, right? When I say I need both. As you can see, price is above the 13 EMA. It did close above it after this huge engulfing candle, which to me is not good. This is not good. I don't want it to close above the last 2 hours of work that is done. But we have one confirmation closing above the 13 EMA. And then if you look on the second one, you can see that this RSI line has crossed above this signal line, which is the red one. So this for me is a clear, go ahead and get out of it, kind of entry. Oh, exit, I'm sorry. So it kind of sucks, but this is part of it, especially because this is a pretty high probability setup. But those two things, in addition to this huge one candle just literally wiped out the last 2 hours of work, I do not like that. So I'm going to go ahead and close this trade. And yeah, so I just closed it. So yeah, this one is done at this point. I'm going to go ahead and take this off. I will not be trying to trade this again. Now what it could do is, just want to throw this out here. This is the next setup in the cycle, right? So just kind of check this out. This would be an ID 50 move, right? So we got this 5,200 cross, right? We have this head and shoulders pattern off of this 200 EMA here that ran. The next move is for it to come back and bounce off the 50 And this could drop all the way down to this 200 EMA, which again was the original target anyway. So if this does happen, to be honest, I probably won't take it because it's Friday. But if this did work out, I wouldn't be surprised. In fact, I'll just put a little note here and I'll just say, check this out, just in case I do change my mind. But I do want to probably stay away from it. And I'm just one of those traders where I'll close my trade and get back in it. I don't want to sit through drawdown, especially in a scenario like this, because this could easily just continue to go up now at this point. This could come back, retest this level, and then drop. And if it does that, I don't want to be holding this the entire time while it's doing this. I want to get out of it. Right. But it does look like this AF trade is starting to go our way. Just a bit. All right. And coincidentally, just look what it did. It literally touched the 13, and now it's dropping. So market makers are hilarious, guys. They do everything they can to try to shake you out of your position.
Oh, big time.
So you gotta expect these things, right? So
yeah,
they're masters at that. So we were down 0.1%. Now we're up slightly.
Nice.
But yeah, that's pretty much it for me on my side. Just kind of monitoring these for the rest of the day. See what we got.
Cool. Just a quick update on my side. My Bitcoin's been taken out at entry price. The rest of the position. But 1 second. Hopefully you can see that. Here we go. Let's try that.
Gotcha.
Okay. Yeah. Okay. Can you see that screen?
Yeah, it just came up.
Yes, we can.
Excellent. Okay. Yeah. So it basically hit the target, took a third out, and then put the stop at break even. Now it's taken out. So now I'm flat Bitcoin. But interestingly enough, I've got a sell short which comes in at 104,236. So if that happens, if we get like a big flush to the downside, I'll actually be going short because that would give me the kind of the reverse signal to the other side. So I'm keeping my eye on Bitcoin. If we get that big flush out to the downside, we may not, but if we do, then I'll be looking to take a short position. As I say, I've taken out the. I'm still long. I should still be long, really, sterling yen and euro yen, but I've taken them both out manually because I can see that the dollar is a little bit strong, as I said before, against the pound, starting to ease back a little bit, and against the euro as well, starting to ease back a little bit. So for me, as we're kind of we're late stages on these trades. You can see literally this euro yen has held long since 9:30 yesterday morning. So we're kind of long in the tooth on the trade. So it wouldn't surprise me if we get some kind of pullback at some point. So I'm happy to be flat out of this one, banking all the profits on that long position, and the same on sterling yen, which again has been long from the same time yesterday. So basically flat these two. The system says I should still be long, but I'm kind of overriding the system a little bit. Sometimes you need to override the system a little bit, and especially with the weekend coming up. But as I say, I'm still long. I'm happy to hold dollar yen because there is that strength of the dollar going into the late session. So I'm happy to be. Where has it gone? Happy to still be long dollar yen, just in case we get a bit of a follow through into the close or towards the close anyway. So that's kind of where I am on the trades. Just a quick one before I hand it back over to Igor. On the dollar index, I saw a question on dollar index just come through there. Where are we? Andre, can we see it hitting 100,000 in the short term? Yeah, there is that possibility. There is that possibility. I haven't actually. 1 second. Let me just come out of the. Purely because we've got this this kind of mini rebound. 1 second. Let me just get my trading platform window. 1 sec. Let's try that. And just very, very quickly, I want to, before I hand it over to Igor, can you see my trading view chart with all of
yes, we can.
All the presidents on there? Just very, very quickly, I'm extremely bearish on the US dollar long term for reasons that I've mentioned before in terms of the technicals, the Elliott wave counts, etc. But also this is something I've mentioned on a regular basis as well, that typically under Republican administrations, the dollar likes to fall, and under a Democrat administrations, the dollar likes to rise. So you can see what I've done here. This is just from left to right, the back end of Reagan, which saw the Plaza Accord and then the crash. Then George Bush Sr. down, Clinton up, George Bush Jr. down, Obama up, Trump 1 down, Biden up, and here we are with Trump number 2, the second administration.
That's very interesting.
So for whatever reason, who knows what the reasons are, and that's another debate. But I just wanted to share that chart with you because I mention it quite a lot, and it's one of the reasons why I'm kind of bearish the dollar. But in addition to the technical analysis, so I'll hand it back to you guys.
Mm-hmm. I remember you said that a time or two, Howard. It was cool that you just marked the chart up like that to show it visually. That's really good.
Yeah, so sometimes it's much better when you see the chart because it's much clearer to see. So
right. No, that's really nice.
Nice observation about presidents. I just think a little bit. It's I think it's because Republicans they're pushing stocks up, and usually when they push stocks up, the US dollar index is going down. So this is the Republicans' plan all the time.
It's interesting. It really is. I mean, I guess my theory is
really interesting.
I guess my theory is more that they like to stimulate the economy and to make the dollar cheaper. You know, like a competitive type thing. But you know, at the end of the day, a lot of people say that, you know, the Fed is more important, but who knows? It just seems to me that the administrations tend to be very, very different in terms of how the US dollar trades. So I'll leave that hanging in the air today.
Nice observation. So I just want to answer on question, Andre. You said, Igor, British pound dollar, we closed today at 1.344. So this is my stop loss, but I think it will not close there exactly, but we will see. I don't know what will happen. But I'm looking right now, and I will show that on the chart. So this is the British pound dollar. I will go to the one days ago. So what we can see, we had one attempt, and now this is another attempt to break this trend line. So if we in next 30 minutes stay above of 1.3470 like we are right now, if we try to do above that level, there is a big chance that we'll start to go up and recover for this drop. However, if we see the break down, yes, it can be 1.344, maybe lower, and then everything can change. And I think that there's a lot of impact, political situation, and this war and everything. And I think that a lot of people trying to go away from the US dollar, as there is a chance that US dollar can go really, really high if we see any kind of the war interruption or war interaction or something like that from the side of the US. So I'm just watching, and I would like to reaction right now. So next half hour, if we see no reaction, there is a problem. So we have the 0.346. Why? Because this level during the UK Open. So this is the UK Open lowest price, and we are retesting right now. But I want to see reaction here. I want to, touch this level and in next 10, 15 minutes just to go up very fast and then to do continuation of the bullish trend. If we fail below that, start to, choppy price, pressure down, etc., I will be out of all my trades and I will not trade that. And if we just talk about gold, gold is in the similar situation right now. We're pushing lower this hour, but of course, this hour is not the end of this hour. And I think that we have enough power to go up. And I think that this is not only because of the US dollar. I think that the gold is more stronger than any other currency right now, because if we just look on the chart and the bigger perspective, like on daily chart, we can see how we are really high right now. As you can see, this is the really one of the highest pushes of the gold. And I believe that this bullish trend isn't over. So we will see what will happen here, but I think that we can much higher. And what is the interesting fundamentally, because if we check, we can see that even the US dollar index is up or down, we can see that inflation reports for all countries together are a little bit higher than expected. And because the gold is hedged against the inflation, I think that if we push inflation higher and higher, either moderate higher, gold will push higher too. So I hope that we will go up. So we will see what will happen here. It's a little bit tricky because the US dollar is the bigger question mark right now. Guys, what do you think about NASDAQ and indices right now in the market?
Man, like they're in a very interesting area, right? Like I've been trying to trade them all week, but it never really like technically sets up like really close. And I don't like to take trades when it's at its peak high like that, right? Like NASDAQ 100 is nearly not far away at all from the all-time high. I don't want to take. That's like buying Bitcoin at 110,000, right? Like I want a retracement a little bit. Let me get a better pricing, and then maybe we can kind of think about it. But yeah, let me share my screen actually and kind of bring up some points here, because yeah, I've been looking, but hasn't been going too well to say the least. I've been just kind of watching them. I got these at the top here. Yeah, definitely just really hot. Like I don't really want to take this. For me, what would need to happen is this would need to peak out, right? Like now, since we have our 5,200 cross, my next move is I'm looking for that M structure off the 200, right? So my market baseline would need to go above this static line, right? Like this for that, what I call that reload, right? Because once this happens, for me, what's happening is they're tagging on or activating those long orders. So I want to get those. I want them to at least trap those traders first to see something like this M structure, and then here I'll be interested in the short here. Right, swing, stop above there. Entry is 800 EMA. Something like I'll take this every day. every day, twice on Sunday. I take this exact setup, right? You can already see on the TDI, the RSI line is outside of this blue Bollinger Band. So it's kind of giving an outside the band, right? Then I want to see it come inside the band as well. So that's what I would want to see here on the US 30, right? This one's a little ugly for the simple fact that prices between these two EMAs. It will be difficult to, even though we have this 5,200 cross, and I'll be looking for that same pattern, right? That M off the 200 with the reload. Say reload here, right? The only thing with this one is, what makes this ugly to me is the M. You would need price to close below this 800 EMA here, because if it doesn't, it can bounce off of it and go back the other way. So it's not as pretty to me as NAS 100. And then if you look at it, we're not even really at the full 1-for-1. So this would need to go a little bit further, which is kind of past that ADR point, which isn't pretty to me. I like NAS 100 a lot better. I got a clear target, right? The 1-for-1 is actually risking $1 to make $1.60. I'm fine with that. So I like NAS 100 over US 30, and then to close it out with S&P 500. This one is much better too, right? So we have, again, fresh 5,200 cross. I'm looking for that market baseline again to go above the static for that reload. Right. And then I'm looking for the same exact thing, which would be that M pattern off this 200 EMA. Come back up, retest it. Nice clear target off the 800 EMA and away, so I don't got to worry about that. And boom, I will put my stops right above this high over here and this swing point, and then I would target this 800 EMA. So I'm looking for moves like this in this level where it's in, right? If this doesn't happen, I'm just not interested in it at all, not one bit. So yeah. Really close. I say NAS 100 first, just because it's already at a really, really high price point. And I can just expect that people are going to try to start shorting this since it's so high. All right. And then US 30, I really wouldn't be interested in because I just don't like it as much as I like the other two. All right. And then S&P 500, of course, same exact thing. So yeah, I'll be interested if it does these two, but if it doesn't, then it's just no trade for me. I'll just pass. I'll watch it do whatever it needs to do, and that'll be it.
Yeah. For me, it just looks like a little bit
pull back to fall all.
Go for it. So yeah, to me the NASDAQ looks a little bit choppy. Yeah, go for it.
Yeah, it looks a little funky.
Yes.
GU. Yes, yep. So GU is kind of in that same little area, right? Like, I don't really like it when it's like caught between these two EMAs like this. We got the first 5,200 cross. Market baseline is now above the static, which is good. So it's kind of giving us that position for that reload. All right. Just a little bit. And then I would just want to see it do the same thing, really. I want to see this M structure, but I want it to close below this 800 EMA. Because again, guys, what could happen is this thing could easily, actually, matter of fact, let me take this off. What it could easily do is make this move like this. It could get here. It can get right here and bounce off again and go the other way. I don't want that to happen. So the smarter thing to do is to wait for it to actually close below the 800, right? You don't want to take it until it closes below that price. So below here, up, all right? This is a little short too because there's no real target area for the 1-for-1, which is a little sketchy. But yeah, I would be interested in GU if it did something like this. If it doesn't do this, I'm not trading it. Hopefully that answered your question, Andre on GU. Yeah, I think that is about
guys.
it, guys.
We are
always,
on the end of the session.
Cool
as
kicking
I
in with
can
you.
see. So I think that it will be peaceful weekend this, and that we will get a nice price next week with a clear trends, not this choppy price. So I wish you a great weekend, Howard and Michael. Enjoy
you too,
the
guys.
sun.
Take care.
Have a good one, everybody.
Take it easy. All right, Andre, Robert, take it easy, guys. Have a great weekend.
See you guys.
Bye-bye.
Hey, Paul and Darryl, nice to see you. Nice
What
to see
is
you, Darryl.
up, boys? How are we today?
Oh, we're
Well,
great. How are
Sunday.
you, Darryl?
I'm good.
It's good to meet you.
You too.
Yeah.
Nice to meet both of you guys.
Yeah. So, Darryl, so where are you from?
I am in California, near
No.
Los Angeles area. It's a big area. I'm closer to Malibu. But yeah.
Oh, what a shame for
Okay.
you.
Sorry, do you guys hear that in the background or no? I have
What?
another
Obviously.
platform giving off signals in my ear.
I think we're all
No,
You didn't hear
we
Okay,
can't. Yeah, no,
That's
no, because yeah.
Okay.
So, Darryl, tell us a little bit more about your trading. What do you trade? Do you trade Forex? Do you trade indices, or what do you?
I
what do you
trade
focus on?
I trade stock index futures, the ES only. That's all
That's
I do.
it?
Exclusively. Yep.
Yeah, and how long have you been doing that for?
Since about 2016.
I thought you were going to say like, since I was about 8 years old, something like that. No,
I've been
that-
trading. I started trading in 1997, so I go a little ways back.
1997.
Yeah,
Damn, okay.
we weren't even
Wow.
on decimalization back then. It was still fractions.
Man.
And
That's a lot.
online trading just started. It was a different thing. But I was working full time. I was dabbling in that on the side for a
Yeah.
long time, and then like kind of around 2012 is when I went full time trading, and I was mostly doing equities for a long time, and then I got turned on to futures, and I haven't looked back.
That's interesting.
a lot of
Yeah,
experience
like-
there, then, I think.
Yeah, I mean, it's interesting. How did you why did you end up with just focusing on we just mentioned equities and so on?
Yep.
Because most people, for some reason, probably because of the marketing, they tend to go to Forex when they start trading, right? That's typically where people start trading most of the time.
They do. I didn't do much Forex at all. I think I dabbled for a few months into it. I don't know. It wasn't my thing, and I don't think I just didn't need to go that route. I was more on the stock side, the equity side. I kind of was. It was interesting because I always wanted to do this. I think as I got later, as a teenager or something, I thought, wouldn't this be cool? Everyone wants to be this cool stock investor or some sexy trader, whatever, right? But
Yeah.
here I am in California. I'm not in New York City. I don't know anybody on Wall Street. No one I have connections to or remotely in that world. No one's in
What? No, I'm sorry. You're gonna have to go, my friend. No, we thought we were gonna get some connections out of you.
No, yeah, we need connections.
I can give you some connections now. So
All right.
I was on this, I had this little dream, but I was never that route. And it was only really until some of the regulations changed here in the US. I don't know when. I want to say very late 90s, maybe right around the 2000, where you can start to self-direct your accounts, meaning you can go in and self-direct in a retirement account, a 401k, an IRA. You did not need to use a portfolio manager or an RIA to do it. You would basically become the custodian of your own account. And there was a process for doing this. So I started doing that with my 401k that I had, and through other assets that I was trading with. My father kind of introduced me and my siblings up with, I guess, kind of, for lack of a better word, like a portfolio manager. This guy was like working for it was called Solomon Smith Barney back in the day. It wasn't even Smith Barney. It wasn't even Solomon. They merged. And then he was working for like Raymond James Financial, but he was just, he was an independent guy, licensed guy. And he was kind of, just trying to put together a long-term portfolio. It wasn't bonds. It was all pretty much, I think, if I recall, it was all blue chip type stocks. And after a few years, I went to him and I'm like, I want to do this and have you not do it. He's like, "Oh, you don't know anything." I go, "Well, yeah, but it's my money, so I think I want to try doing it." And he didn't like it, but I basically moved the account from him.
He knew what was
Yeah,
coming
he
for
didn't.
you.
He lost out on the commissions, but I moved the account from him, and I messed around with that kind of money for a long time. like for a few years. I didn't blow it all. It was hard to do because it was still expensive. The commissions were expensive back then in the early 2000s. .com bust had already happened. It wasn't as easy. There wasn't all this online E-Trade, Ameritrade stuff that people were in. So you really either had to call up and place a trade, or you had to put one through the internet, which was dial up, and it was very laborious. It took a long time to do. So I was thinking very small little trades, and I would find, beaten down stocks, and I'd, probably said, I'm gonna swing trade it for a few days, and then I was a loser, and then I became a long-term holder, right? Because it's down, and like everybody does, they all start out thinking they're gonna have a short-term position. But as soon as they're out of the money, they're like, well, I guess I'm holding it for a long time, unless you want to let it go.
Yeah. Oh my God. Yeah.
But anyway, so I did that for a long time. And I was working, and basically making my living through a career. And so it was only until around 2012 when I started to trade full time.
Right, from 1997. You hear that, ladies and gentlemen? It takes a long, long time.
And I was losing money. I was losing money all along. I mean, I really was, because I was trying everything that I wouldn't say I was trying to find the Holy Grail, because I didn't know what that was. But we didn't have the information that we do today with everything online. And I'm not trying to say all these gurus are the experts, because they're all full of it. Most 99.9% of these guys don't know what the hell they're doing, but that's another story.
Which percentage are we in?
Oh no, this YouTube channel is fantastic. We're the 1%ers for sure. But yeah, but I mean, I had very little. Again, I didn't know anybody. I didn't know how to. The craziest thing that held me back for years was, I wanted to make that leap and really give it a go to try to make it more, full time, or try to I won't say earn a living off of it, but supplement from my trading. And I just didn't have the conviction, because I did not know for certain if it could be done. I did not know anybody that was day trading or doing this, aside from going into the Chicago Merc and trading on the floor, or going to the NASDAQ or the NYSE or someplace, some hub, London, Singapore, Hong Kong, somewhere like that. I wasn't connected to the financial industry. And so I heard guys doing this and that, and I'm like, are they full of crap? Are they just selling books? Are they, whatever?
Both.
And it really held me back, because I was thinking, man, I just keep, I was just bleeding 1,000 cuts, right? I would do fine, and I would lose, and but I was never where I can just break away.
I mean, that's the thing, though, isn't it? It's like the only way you fail, guaranteed, is by giving up. Right.
That's true. That's exactly true. But I was fortunate that I had, I was making good money from other sources, and I really didn't blow accounts back then until I started like with futures and stuff. And then it took a little while. I still blew accounts, but back then I would just add, I was down. I would take some money. I have a bonus or whatever. I put a little bit in and hold something, and I'd do well. I had some stocks that did very well. I mean, when the credit crisis happened in 07, 08, well, I don't want to tell this story right now. This is not a good way to go off. I was killing it. I was killing it because we had Hank Paulson, who was the Fed chair back then, and he had this thing where, remember, the U.S. banks were too big to fail, just like the automotive. Ford, General Motors, Chrysler, they're too big to fail. The government has to bail these guys out, bail out the airlines. They won't bail out all the mom and pops, but they'll bail out these freaking guys. It's like, it's such a.
It was a controversial thing at the time.
It really was
with Obama, but there, not necessarily any good options. I mean, it's good that actually you've got an insight into that period, because here we are again.
Yeah, I know. Well, things move in, things rhyme, right?
Yeah,
They do.
and so it'd be really interesting to be able to use you as a reference there, because it seems like you've got a lot of insider knowledge. But I think I'm just going to try and put a trade on.
Yeah,
and then
go ahead and do
maybe
what
we can pass back to you, and you can
Yep.
show us some charts, what you're looking at.
Yep.
Does that work, Jannie? Is that cool?
Yep, works for me.
All right, so we'll do crypto properly later, but I just want to share my screen for a second. And the only certainty at the moment is fear. So this is Bitcoin dominance, which is essentially representative of if it's going up, that's bad for altcoins. Essentially, it means money's proportionally leaving them. And at this moment, we're having a bit of a sign that we're probably going to be coming upwards, which is not good for altcoins. So I'm looking for a short, and the only short setup I've got in my back pocket this week is Dogecoin. This is Doge 2 hour, and the premise of this trade, I'm already in this on another exchange, another platform with quite a high leverage position. But the idea of my premise is this: I want to come in now for I want another retest of the 50. Perhaps if it comes down over the next maybe hour or so, if we get a little bit of a recovery pump, get in a little bit higher and then short it downwards. So I've got all that set up. Just going to switch to here, and I'm going to put that on, coming at 17194. Now, hopefully we'll get that hit today, but we'll see. So I'm just looking for a little bit of recovery and then to short it a little bit higher. And just the premise of this is, right, because there's a bit of uncertainty, because Bitcoin's got a bullish posture despite the current market conditions this week because of everything which is going on. I want to be in this pattern for my entrance. So if it does go the other way, if it comes back down, I can get out. That's the simple premise, and I'll let you know if it gets filled today. But I just wanted to put that on, and now perhaps we can have Darryl. You can walk us through what you're paying attention to at the moment, maybe.
Well, I have a question. I have a follow-up to what you just showed us, Paul, because I don't trade crypto. I don't know a whole lot about it, but it sounds like what you're just showing there is that is there a divergence between crypto and I don't know the rest of the markets? I mean, Doge, you're saying is you're looking for it to go short, right? It's bearish right now, but Bitcoin's on that.
So I've got a short setup with a premise behind it, descending triangle. Couple of losing a support level. It's not ideal, but given that the market it looks like Bitcoin may be coming down a little bit due to just the pressure at the moment. That's the play, because we just don't have Bitcoin in a position for a long. So it's the only play. I'm just trying to trade fear.
Do they trade? Do the cryptos typically trade in correlation with, let's say, the indexes at all or anything, or they're just on their own thing?
Typically, there is Bitcoin certainly. The market tends to make friends throughout the year for 6 months. Sometimes it's the S&P, sometimes it's more the dollar. Other times it's more specific things, maybe like even Nvidia stock. Sometimes with the AI tokens. But right now, it is completely all over the place, and everything. Our usual kind of the sort of pegs we look to for correlations, like the dollar's cheap, therefore good for risk assets. That's all out the window because of what's happening. So at the moment, it's Bitcoin is doing well because it's deflationary asset, and it's looked as a store of value. The rest of the altcoin market is seen as a risk asset, which is the worst possible thing to be in at the moment. Although everything's bad to be in at the moment, so maybe
nothing makes sense right now. I mean, gold's up, bonds are up, the market's up, everything's up. Nothing is where it should be. The only reason I was mentioning that, Paul, was because today is triple witch. Today, it's called triple witching, which is it used to be called quad witching.
Sounds very Shakespearean.
It's expirations, and it only affects maybe me. I don't know, Jannie, what you trade yet, but it's the third Friday every quarter. So like the third Friday of March, June, September, December, and today is that day, and the market is pulling back. At least the indices are pulling back a little bit here, maybe because there's expiration at the end of the day, closing off. Usually we get some sort of heavy volatility, but not always. It hasn't been the last several quarters of this. The S&P, like the ES, used to really go crazy on triple witch day, because what it is it's the stock options expiration, it's the stock index futures expiration, and the stock index futures options expiration all on the same day at the same time.
Well, maybe I shouldn't be in this trade then.
So I'm just asking because you're bearish on it. I'm thinking, I'm looking at the ES, and it's been falling since the open, the US Open here. Although all the overnight it was going all the way up. So it was just an interesting observation I had.
Yeah, I mean, just honestly, it's just trying to make sense of the chaos. And right now, there's more fearful scenarios than there are hopeful ones.
For sure.
Sorry, world. I'm trading fear. Apologies.
No, I was just going to add to what you were saying, Paul. Or actually, Darryl, you asked about whether Bitcoin is in sync with other markets.
Yeah.
Bitcoin has been doing its own thing this year, right? It's just not been in sync with anything. Usually, there's some sort of
the M2 global. Maybe.
Well, I mean, if you look at, say, for example, the dollar index has been melting down since the beginning of the year, and gold's just been rallying since the beginning of the year.
Exactly.
And Bitcoin's been doing its own thing. It's not been in sync with anything. It's been struggling, and
it's rotational. I look at it every day. I notice it rotating. Like it seems to get up to 110, falls back down to like 100 or close to, comes back up again. It's. I don't know. I mean, I don't know.
Jannie is absolutely. You're spot on because the typical correlations are not there. I mean, the M2. It's not the sort of correlation you trade off, but it is there, and it's still there, and it's quite impressive, the correlation. But in terms of the traditional things, you're right, it's completely all over the place, and it is doing its own thing, which is good, right? Because you don't want it to be brought down by what's going on, right? You want it to be seen as a safe haven, as an island.
Exactly.
Yeah, but I'll be sorry to interrupt you. You're going to get used to that, Darryl. I interrupt everyone all the time.
I interrupt you. Sorry.
But I'm going to place a small trade here on Bitcoin. I am short on Bitcoin. I think we can go lower. I think ideally I would like to get like the 98 level, which is a pretty strong support. If I just zoom out, you see that? That would be a pretty strong support level. I don't know. Can you see that, Darryl?
Yeah, I do.
Yeah, so that's that's definitely a level I'd be interested in to take along. But right now, because of that divergence in price, we got a bounce of this support level here. This is where I was interested in taking along because I felt that you see that V shape, you'd probably be familiar with the V shape. I'm not sure if this is something you trade, but when you get that, then I typically identify that as a higher low in an uptrend, and that's very necessary. It's like a really healthy kind of price action. When you get that, it looks like it's going to completely fail, and then it makes that beautiful V shape right back to the top, and that's very bullish. But right now, it just couldn't go back to the high. So when it came back to the support, this is where I was taking along, and which is a small position, and then I got stopped out. Then this FIP level was the next level of support. It did find support there, but I wasn't interested in here because you've got the resistance right above it, and because of that divergence, I thought it looked definitely a little bit more bearish now. And the fact that we got back to the 61.8, this support level has now been weakened. I don't know how you feel about support levels, but if you had a very strong support level and you trade off that level, if it comes back to that level, then that support has now been weakened. Okay, it doesn't have the same significance compared to the first time it traded at that level. So for that reason, you can see we got back to this resistance area. Ideally, an entry over here would have been far preferable. But I'm going to just place a little small trade here. And
I mean, it seems like you're doing exactly what I'm doing just with Bitcoin, because again, I'm waiting for a little bit of it to come back up a little bit, and then I want to enter. So we're doing the same play. It's good. Morning,
okay.
Robert.
You're selling into strength where the buyers are, and that's the right move. Usually.
So, I mean, it's not ideally like when I like to wait for key levels on longer time frames. So at least a 4 hour, maybe the daily. So we obviously not at one of those levels at the moment. So this is not a very strong play in my opinion. If you can get something that comes off, say for example, gold, right?
Like Jannie, are you more intraday, or do you hold over, you swing?
No, I like to hold positions for a little bit longer and let it play out to for a little bit longer than just intraday. But I do trade intraday as well. But I just feel like the longer time frames they're stronger, they're more significant compared to the smaller time frames. So, you can read, or a 4-hour candle, for example, is much more reliable than a 15-minute candle. Okay, it's just because it played over a longer period of time. Or the daily is even more powerful.
Sorry.
Oh, hey, is that Paul's dog or Darryl's dog?
My dog.
It's not my dog. We got two dogs.
My dog's barking at another dog in the back. I hear this.
Well, my dog can hear your dog, so let's see what's happened.
Really? See, I'm in the headset, so if I had my speakers on, it would be worse. Let me see. How do I mute?
Actually, Paul's dog is making moo sounds. He was mooing the other day. He was making like a cow.
Yeah, she's got identity issues.
Mooing.
But anyway, so I like to look at key support levels on longer time frames, like the 4-hour, the daily, and so on. Mm-hmm. They make for a really beautiful place, or even like these third touches over here. And then when I do get them, but the I wouldn't say it's a problem, but it's just when you do wait for those levels, you don't get many trades, obviously, right? Because it can take a while. For example, when gold was over here, I was waiting for this level, and it just kind of shot back up without me, and I'm like, oh, come on, man! And then so I had to wait like another 2 weeks for it to come back down, and eventually got the level.
Yeah.
But those are the A plus, if you will, really, really strong setups. Yeah. And that's not what we're having on Bitcoin at the moment. Okay, we don't have something like that. It's not the level of this resistance level doesn't have the same significance as the one I just showed you on gold. So anyway, so that's the trade. I'm going to hand over to you, Darryl, please, if you don't mind. You can just show us your magic.
All right. So I could share a screen, but I will tell you that I just got a platform about 2 hours ago.
Oh yeah, don't worry about that. I know exactly what that's.
So
yeah, don't worry about it.
But I am a volume profile auction market theory guy. So when I trade the ES, I don't use candles, but I use another third-party software that I'm not going to mention, or I was told not to mention. So I've been using that. I execute from that. I do everything in that, and it's a beautiful thing. But I need to switch, and I will put something up because I will talk about something here. Share screen. Now what do I do? Like I have 4 screens, so I need to select something here. Do I?
Yeah, you can just.
Okay, and then I can pick. Okay, hold on. I can.
Hey, morning, Robert. How's it going, mate? Robert is also from California, right? Robert? Yeah, he is.
I'm sorry, Robert. No kidding. Where do you see him in the chat? I don't see anyone in the chat.
Yeah, he's in the chat.
He visits us in our houses.
All right, so hang on, guys. I'm trying to. Okay. I'm going to pull up. I have so much stuff open that I'm careful what I need to show. I'm going to show.
I think Arcus just wants you to do a comedy show, Jannie.
Oh, Arcus FX. Hey, you know what? I really.
There it goes. It took a little while.
We never had a session together. I really wanted to have a session with you, and that just never happened. I'm really gutted about that. But anyway.
Yeah.
Right, so this is okay. So in full disclosure, I was trying to make this work using Quant Tower the other day, which I was also provided a login. But it didn't have level 2 or depth of market, had nothing on it. So I was trying to mess with it last night, and then I sent a message, and then I got this morning. So I just opened it. I just loaded it up. I haven't even messed with this, but I need to find a way, and I'm going to spend some time over the weekend to, normally, I need to put some, I need to split it by session, maybe by ETH, RTH, different stuff, but I need to have volume profile on the side. I need to have a better dome. I need to do some stuff here, but this is what I will show. As I was trading this morning, I took a trade. Well, I take a lot of trades. I trade a lot of volume, guys. So I won't say I'm a scalper-ish. I mean, I think most people will call me a scalper because I'm intraday, I'm flat every day, I don't carry over. It's kind of the nature of futures unless you have a lot of margin that you're willing to sit with. And I think it's very risky in this environment anyway, holding things over. I don't think I'd sleep very well knowing that I have positions on, and I trade fairly largish size, 10, 20 contracts at a time, in the ES. So, I'm moving money, and I'm trying to make money every day, 5-10 grand a day type of deal. So,
does that happen? Do you make money every single day? Don't you have losing days?
I have losing days, but I make money. The way I look at this whole business, is I think I found something that worked for me, okay. and I discovered an edge, and I lean on that sucker, and I put size on where I have an edge, and I try to make my money, and if I can make it, I'm done for the day. I move on. I compound it and just roll it.
Yeah.
Anyway, this is my session, 6:30 my time on the West Coast here. This is I guess this is a 15-minute candle. Yeah. So this is the overnight in the ES, Asian session, London session. It's just been creeping up here, getting close to all-time highs. We're not that far away. And then we had this candle. It's hard because I don't have the volume profile here, but this candle obviously is, how many points did that go down? Over 20 points, 22 points. Opened up high and then came back, but there was a lot of movement in here. Well, I bought in around the bottom here and rode it up, and I got out almost at the top of this candle, but I wasn't, again, I'm not trading this platform. I'm using my other platform. The reason I did that is what I do every day before I trade is I want to see what's happened in the overnight. And I don't really use a lot of indicators. I set levels. I use VWAP, but with volume profile, the big things are like, volume point of control, midpoint. I do, the high and the low, and then, the initial balance of the first hour. I tend to trade to those things. Well, this was the top of this candle right here at 6:29 before the market opened in Chicago. This is the high of the overnight. So imagine if I had my custom notes would be over here somewhere. I would say overnight high. This thing was fluctuating within this candle, and I got in at the bottom thinking because it was going to retest the overnight high. At least it was something I can go for. It doesn't have to. It could either go there or it could just keep going down. But that was an easy, because we opened right near there. I'm like, it's going to test the overnight high. So I rode this up, and it got to the overnight high, and it pulled back. I got out like 2 points shy of it, which is fine with me because I trail my stop. And then it kind of pulled back, and then it went to retest by another point, and then it never looked back. So it's been kind of selling off. And I don't know if this has much to do with triple witching, or if it's just, Friday, or what's going on in Iran or anything else. But I'm just mentioning this. I wish I had something better to show you exactly how I would have gotten in that trade. I mean, I scale into my trade.
That's all right. I mean, you'll probably be,
and I scale out, and I move I trail, and I do all that stuff. So
yeah.
That's all right. So maybe you can show us your longer, since you don't have all your indicators set up at the moment. So what about the longer time frame? Do you have like a bigger picture view on what you expect?
Yeah, but if I had this set up, I would go back a month, and I would have all my I would have it by day. So I'd have the volume profile where I could see, where they're overlapped and where they're at. But we've been consolidating for a couple of weeks here.
Yeah.
We really, I mean, we haven't dropped below 6,000 in the S&P or the ES. I mean, we just had rollover. So these numbers tend to change a little bit, right? Because it's a derivative. So the actual S&P numbers are different than the futures numbers a little bit, but yeah, we've been up here. You know, we did that V bottom you were talking about, Yanni, with you're showing me like with Bitcoin, right? The pullback.
Oh yeah.
And we did that after Trump with the tariff thing, right? We just freaking went down and came right back up, almost like COVID. It reminded me very much like COVID. Ripped down, ripped up. So now we're at the top. I think we're going to roll over here and get soft.
I also think we're gonna miss the eye. I don't know why. I just feel like we're not going to get to the all-time highs.
We may touch it and kiss it and say goodbye, but if we don't, you know, there's gonna be a lot of people trapped up here. And
yeah, that's a nasty little range. I mean, if you go to your 4-hour chart, we are right now.
You want me to go to 4-hour?
Yeah. Right. Is that the GUI platform? Which platform is that?
This is Project X, which is TradingView, I guess. I've never used TradingView, so I need to learn this a little bit.
Okay. Yeah. So yeah, I think I'm gonna have to zoom maybe a little more so you can see the previous highs.
I know.
Yeah.
I mean, I can go daily, but I don't have anything marked. That's the problem. It's just all.
Okay. It doesn't look the same as because I'm looking at the NASDAQ.
Well, the NASDAQ, I mean, it's similar, but it's much more volatile than the ES.
Yeah, but I mean, like in terms of the consolidation over the last number of weeks,
it's very similar.
It's very similar.
Yep.
But we actually were forming that. I don't know if you picked it. You can see that we formed some sort of like a wedge, right? Like an ascending triangle.
Yeah.
And then it just.
I don't trade that well. I don't trade, you know, patterns like that. But I know it, but I understand what you're talking about. Yes.
It was just looking like it's edging to the upside, and then that pattern just broke, and now it's just a mess. It's a bit of a mess. It's very difficult to predict or to stack probabilities in one direction or another. But I'm not bullish on the NASDAQ. I think we're going to see a correction.
I'm not bullish on it. I'm not bullish on. I'm not even bullish on gold.
Yeah. I think like gold has rallied so the levels are just ridiculous, right?
Yeah.
Where it got to. So it's going to be very hard to top that.
You know, we have a lot of things going on, you know, geopolitically and otherwise, but we could talk about tariffs. We could talk about all sorts of things that may, you know, whatever, what the Fed's going to do with interest rates or whatnot. But I really think the U.S. debt ceiling is going to be the biggest problem because that controls all the flow overall here. And so, you know, we're all retail traders and we think we do a lot to move this, but we don't, right? This is all institutional and hedge fund and money making and market making and all that stuff. So once it goes, whatever way it goes, it goes.
Yeah. What do you think?
But you know, I don't try to predict this stuff anymore. I mean, I used to try to do all this stuff, and that's kind of goes to my point about why I just stick to
there's a difference between like what we're doing now on the NASDAQ. Like I say, I think it's going to go down. That's very different to looking for a trade setup. Okay,
that's right.
To completely different categories. You just kind of that's just talk. That's more like out of interest or just for. I don't know if that makes sense. Okay, it's not. You don't just because I think the NASDAQ is going to fall short doesn't mean I'm going to go place a short trade.
Yeah, exactly.
Right, because it's not a setup. There's nothing there for me.
There's so much randomness involved, and whether you expect it or not it doesn't care what you think, right? But
yeah, exactly.
You know,
that's exactly the point.
Yeah. I mean, and for me, I trade so short term that there's always trades throughout the day. Like, you know, kind of like what you were saying, Yanni, with the Bitcoin, if you missed on that run up, you know, you had to wait maybe 2 weeks or so before it came back down for an entry, right?
Oh, gold, yeah.
Or gold. Sorry, the gold.
Yeah.
I don't have that problem really. I mean, I can take a lot of stuff. If I trail pretty tight, which means I get out of trades pretty early. I try to let them run, but I'll just kind of trail my stop and scale it and, get out. If it takes me out, it takes me out. Sometimes it takes me out and I'll go right back in because it's still moving in my favor and it just happened to pull back and hit my stop and I still want to get back in. Right. But my point is I take a lot of trades if I need to try to get to my daily profit target. That's my key is I have my daily profit target. My expenses can be high, but I mean, I don't mind spending $600 or $800 in fees daily if I'm making several thousand or more,
Yeah. So what have you ever, how do you handle like a tough day? It's like, say you place maybe 2 trades and they both fail. Do you take a break or do you because like if you have a set profit target for the day, that can potentially be dangerous, right? Because you keep chasing something and you just dig yourself a deeper hole.
You do. So and that was always my biggest problem. And I still suffer from it. Over trading and revenge trading. That's my biggest thing because I can make money. Almost on any day. The problem is keeping it or being an idiot and pushing it, right? Or not knowing when to stop. I'm up $3 or $4 grand and then shit, I'm down. I only have like $500 left or something. Like, what did I do? I'm at the point now where I've kind of I have a separate spreadsheet, which, I think trading really, I tell this to some of the guys that trade that live near me and we hang out and we'll meet up from time to time. I tell these guys, and these are all aspiring guys or young guys are trying to, find consistency and make a living. I tell them, look, ignore all the noise. Stop trying to figure everything out. We're not trading the market. We're trading ourselves, essentially. We're trading what's in our head. We're our worst enemy, It'd be easier for a computer or a robot or something. It would be much, much easier. But we have all that emotional crap going on. So I've gotten to the point for me, this is just what works for me, is I needed to put forward a spreadsheet for like the whole year. And I know this sounds crazy, but I'll have like a starting where I'll start the year off. And if I make X small percentage a day, and I extrapolate that sucker out and I pull out 50% of my profits for the month, which I do all the time. I pay myself, I take off 50, I keep the other 50 in to grow the account. And at the end of the year, I kind of settle things out. But what I do is I show myself, here's what I can do by making smallish percentages every day and just let the compounding work. And at the end of the year, it's like, oh my God, it's a huge amount. What that does for me is it tends to settle me down. So if I make whatever, I'm done. I don't really have the need to say, well, wow, I made a couple grand in the first 20 minutes. Let me just keep going. If my target was 1,900 for the day or 1,800 or 2,000 and I hit that, I am done. I'll shut off and I'm done. Like I'm done. Because I know that I'm on target to keep getting my desired goal at the end of the month and the end of the year. It's just something that tricks me to walking away. Now, I also have stuff set up with my broker, that'll auto liquidate if I get really careless. So I don't destroy everything. That'll auto liquidate me at the end at some point, and then I can't get in until the next session starts.
That's very good. That's a. And I
also have some stuff that I do with Rhythmic. With Rhythmic Trading Pro, you can go in and you can also set some smaller stuff where it'll just stop me. I mean, the problem with Rhythmic Trader Pro is I can go in, I can log back in, and I can change it. If I was maniacal, I could do it. Like, oh man, I hit my $1,000 daily loss limit. Well, but I'm seeing the market really good and I want to go back in, right? I could change it to.
Was that the thing you were trying to avoid mentioning?
No. Oh, no,
No, is
that,
that
that no, not that one. I mean, rhythmic is rhythmic. That's just a no.
No, that's just a feed.
Yeah, that's just a
It's
feed. Yeah, and
yeah.
yeah.
Hey,
I mean,
are
Are you like? Is it? Oh, you can. I'm going to ask you a question. I want to know what this is now. I'm very curious.
Yeah. Go ahead, ask.
Is it blue?
The symbol, the logo. It's blue. It's okay. It's something you read.
Like, oh, okay, right.
It's a
but
heat
is
map.
this
It's a heat map.
right.
It's a heat map.
Okay. Is it
Liquidity
book
heat map.
It's not book map, right?
Yes,
Book
it is.
map.
Yes, it is.
Yeah.
You said
Okay.
it. Yeah.
I mean, why are you not allowed to say it? Like every futures
I don't
trader know about
I
what's
know.
going on out there and what you need to be successful. Okay, all right.
Is
I
it
was just
Prime-
I was
is
I
Hola
was
Prime-
I was told I get a slap on the wrist.
Well,
Okay.
you never know when that's going to come. But I mean,
But
is
then
Hola Prime
but then I said
Coca-Cola or
Yanni
Pepsi?
Yanni's my moderator, so I'll let Yanni fall on the sword. What do I do?
No, I was just look, but you do need like if you especially if you trade the way you trade, Darryl, and
I need
most
I
other
need
futures
this.
you need that kind of stuff, right?
Yeah,
So
exactly.
it's just how it is.
Yep.
We're not going to hide. You can't hide that from people. Otherwise,
No,
you're going to make all the money, and the people are going to watch you. Like, how do you do that? Like, fortunately, I can't tell you my secret.
And the nice thing about that tool is, moving when you're in a position and moving things around and scaling and it's just so convenient and easy. And I don't know. I've been using it forever. I've been using it since I think I got it in 2017. When I first got it, it was only monochrome. They only had grayscale. They didn't have all the colors like they do now.
Okay.
I think the colors came around like in 2018 or something. So but it was great. I'm like, this is pretty cool. You can still see all the, where the liquidity was resting and stuff like that.
I mean, whoever invented color, genius.
That's how I feel about the calculator. Anyway.
But I mean, there's so essentially, I don't live and die by the heat map. I don't it's very helpful to me. It's very helpful to me, but I really look at volume profile and these high volume nodes and low volume nodes, and it tends to mean revert and rotate up and down. And it's auction market theory. I just look at it as volume. It's all volume based, and price is more popular in certain areas than others, and things get retested. And I just watch the ES. I've watched it for so long. And I'm not saying it's always the same because markets do change, of course, but I can come in and I'm fully discretionary at this point. I'm not systematic. I'm not have hard, fast rules on things. You know how Yanni, you were talking about where sometimes either at a support or resistance level, it'll hit and you think it's going to break out or break down, right? Either way. And it doesn't, and it pulls back. Oftentimes what I do, the way I trade is I'll wait. And this is just because I'm not trading willy-nilly everywhere. I have certain edges that I look for. So let's say we're getting to retest a high or low of the day, for example. A lot of people would see it, and even if it has a lot of energy going up, let's say it's going up. We're long and we're looking like we're going to break out. I'll still sit and wait, even if it's got movement in it, because there could be a stop gap. It could just be a sweep and collect all the stops. And people always think, well, just because there's a line there, there's a level, there's whatever, they think it's just going to hit. And it doesn't. It may come short. It may blow through 2 or 3 points and come back. And I find that it does that a lot. And that's where a lot of, inexperienced traders get caught. They look and it breaks through and they're, a point or 2 or 3 and they're like, oh, good. It's moving up. I'm going long. They enter and it just comes back and, dumps 10, 15, 20 points on them. What that does is it's just they're just looking to collect all those stops that are sitting up there, that have been sitting there while it's been going down, and bye-bye. So these are things that I've noticed and I've, kind of vetted for myself over time. It just, another thing I always tell these young guys that occasionally meet up with is I say, don't, just try to work on one setup or one structure, one thing, and perfect and get as good as you can on that. Don't worry about all the other stuff. Try to find something that can make you a little bit of money every day. Make $25 a day, $50 a day. They'll feel so much better about themselves if they made some money for the week and they were, they were plus on the week going into a weekend. You feel great versus, oh crap, I made money all week. I gave it back on Friday and now I got a crappy weekend. I used to go through that all the time. I hated it. My wife would say, how did you do this week? I said, oh, I did great. And I'm blind to myself going, I can't tell.
Well, you make a good point about, I know you said you're not really a pattern trader, but one of the things which I use to corral perhaps some overzealous students of mine is I'll tell them, I'll just be like, look, right now, the market is all about reversal patterns because we're moving essentially from a downtrend to an uptrend. So get good at these patterns, these inverse head and shoulders, find a strategy which works for you. So you get familiar with what you need to look out for and how to approach them. And then once you've done that, move on to the next. And you're just filling up your tool belt with experience.
Yeah.
Right? That's what I always say.
That's a very good point, Paul, because you don't have to be you don't have to be a jack of all trades either, but you should have a handful of things that you're good at and you apply it whenever the market calls for that tool, right? Or that pattern or that setup. It's just, but that comes with experience. But I find like in the beginning, all these guys, they get on, whether they're buying a course or they're following some YouTube, whatever it is, they're getting, it's like drinking from the fire hose, right? Everything's coming at them and they want to try everything at once, but it doesn't work like that.
It's a bit overwhelming. I mean, that's exactly why it takes so long, right?
Yeah, it does.
There are so many different avenues you can go down in trading.
Yes.
So many different styles and time frames you can focus on. And it's very, it takes a long time because you can test something for 6 months and it just doesn't work, right?
Yeah.
And then you think, all right, maybe it's a discipline issue, or maybe it's a psychological issue, or anything of that nature. But when you really start to discipline, you become a disciplined trader and you follow the rules and you still lose money, then you're like, oh,
I know.
Okay.
I know.
Right.
But you're starting to kind of maybe turn the ship a little, right? You're starting to make gradual progress.
Yeah. But now you realize, okay, you know what? This strategy is not working at all, right? I'm going to have to make a tweak here. I need to look at something else.
Yeah.
And then you do that for another. It's like it goes just like that. 5 years is gone, right? And you're not making money. Do you see what I mean? This is what I'm saying. But it's really, really difficult for most people starting out because it's like you say, it's like drinking from a fire hose.
And think about it though.
So much.
How else do we really know what we're good at or what we like or what suits our temperament better without finding or seeing somebody do something, right? You kind of almost have to, I don't know. I started with equities because I was learning from a guy that was teaching me about stocks. If I had someone that was teaching me futures or options, maybe I would have started that way, but you don't know what you don't know. So you got to just get in and try a bunch of different things. I guess it's kind of like dating, right? You date a bunch of different girls and you don't know really what you want or what you're going to end up with. And you find, I don't like these kind. I tend to like more of this or this. And it just kind of eventually you find what works for you. But that's, I think, what takes a long time too, is you try a lot of different things. But I do think a big trap is, I was very guilty to this because I wanted to make money badly. And it's like, okay, well, what are the successful traders doing? They're doing it this way. I need to trade that way. Okay, well, maybe they're very successful and they're a long-term position holder, but I'm going stir crazy because I want to trade a little more. It doesn't sit with me. So I need to deviate and I need to do what fits me. I do think the time frame is probably the overarching thing that starts first. Based on the time frame we all like, then it's like, okay, then what asset class maybe, or how much money do you have? What do you I don't know. You got to start somewhere, but the time frame really is I think it affects a lot of things. I mean, Paul, what made you how long have you been trading crypto? And did you start with crypto?
5 years. Yes.
5 years. That's good. Okay.
5 years. Yeah.
And what makes you, what do you like about that versus, other things?
Well, with
can't hold it in your hand. Yeah.
I mean,
that's one thing.
With volatility,
Sorry, carry on.
I can't hold the ES in my hand either, though. It's not like I have a bushel of soybeans delivered to the house at the end of expiration.
Well, look, I mean, the thing is, right? The easiest way to make money in crypto is just buy at the right time and hold it. Right now, that's what I did as I was learning.
Yeah.
And I admittedly probably got a little bit lucky. Just got into crypto a few months approaching kind of the ideal time to buy, and it worked out great. Leveled up my capital straight away, and then while that was happening, I was learning how to do proper trades. I mean, I did start trading Bitcoin, and I had no idea what I was doing. I was just playing around with maybe 7K, right, and just playing with Bollinger Bands and stuff like that, and just trying to catch the top, and it was working, but it's not in a way which would ever be consistent. And that's the thing. So you're always setting yourself up. Oh, I've had 4 good trades and I don't know what I'm doing, which means the 5th one's going to wreck me, right? So that's how I got in essentially. And I'm still learning, still progressing. The market is developing. I mean, perhaps it's the fastest developing market around in terms of.
So.
It's changing.
It's certainly much more stable than it was 5 years prior, right? I mean.
Yeah, and I think there's risk everywhere, but the opportunity changes, the risk changes.
Yeah.
The institutional money, which as you was talking about earlier, which is now in crypto, obviously changes the game for Bitcoin interactions, and the future is going to be very interesting. So there's a lot of things, but this is the point. I mean, any good trader in crypto has to go through a 4-year cycle to have any chance of surviving and having consistent gains in the future, right? And the reason why I say that is because the last 4-year cycle is completely different to this 4-year cycle, and the next one will be completely different, right? So I suppose if you're trying to become a good crypto trader and you haven't even done one, then it's really challenging because of those associations. It was DeFi, it was NFTs, now it's meme coins, now it's you've got to keep up with it. So you've got to live it.
Were you trading other asset classes before, or you just started with crypto?
No other asset classes, although these guys are tempting me. With their approaches and strategies, and some of the markets, not so much now. They have been look a little bit more sedate and calm, which I think is quite appealing to me. As living the crypto life is I mean, look at my hair color. I mean,
Oh, dude, my hair color. If I don't shave it, I'm white. I'm pure white. Okay. I looked at the crypto. I mean, like all the altcoins, it's kind of like penny stocks to me. Still, it's just kind of wild west in a way.
There's a truth to that. Yeah.
Yeah, definitely. I mean, like Paul has shown us some drain smash drops. Damn, have you seen those? Look, it's like you say, that was like it's penny stocks, but it just it looks calm and then it just drops like
it's 90%. Like an Acapulco cliff dive, just woo.
What, the Titanic? It's a good ship,
right? But I don't know, like we spoke before, I don't know how you trade that because of the lack of liquidity, right?
Yeah.
How do you get out? Like you place you just don't. Yeah, you see.
You're in hell. Enjoy the heat.
It's a problem. No, I mean, like even if you go, no, sure, will be fine.
I don't know. I mean, I would think you kind of have to like I trade with.
Know what you're doing.
I trade with brackets. I enter every trade with brackets, right? So I always have a.
This is stop loss or take profit as well.
Yeah, both. But I will move. I tend to move them, but I'll enter with a 40 tick take profit and a 20 tick stop. So basically, 5-point stop and a 10-point take profit. But I move them around. The reason I do it that way though is because if the ES is moving pretty quickly, or we've got news, or we've got Trump tweets or whatever's going on, right? The thing can start whipping around. I don't want to get caught, and I just want to at least cover my butt and get in with a stop, and I can start moving it. So I don't typically stay in a trade if we're approaching like a big news event. I want to get out. Usually the book thins out, and then an algo or something will really take it, right? And you can just get You may be on the right side, but it'll just come down so far, it'll just wipe you out. But if I'm in a trade like that, and the reason I'm saying this with, because I'm thinking like with some of these cryptos, right? The only way to do it is to protect yourself. If I was in a trade and I wasn't able to get out, and I'm like, oh God, it's going to be a big, I don't know,
use protection. Right?
Non-farm is coming out, or CPI, something big is going to be released, right? And I know this thing's going to maybe whip like 40, 50 points in the ES. I'll keep that bracket and I'll just move up really there. And I'll maybe just like, let's say by chance, the first algo move goes in my favor. Well, maybe I'll calculate about 20, 25 points and I'll move my take profit up there. Occasionally I get lucky and it hits it. So I make a nice windfall and I just get out, but I made some money. Normally, if I'm in that trade, it'll take my stop and it'll get me out with, and sometimes it even slips because it's moving so fast. So it's kind of a risk. But I think to do the crypto stuff like that, the only way I would do it is probably bracket myself and just protect.
Well, you mean you say that?
I don't know.
I mean, one of the biggest things which kills people in crypto is just the liquidity hunters, the stop loss hunters, right? And firstly, we're not suggesting people should not have a stop loss, but and I don't trade that way, of course. But when the world of crypto, once I mean, I trade it relatively traditionally, in terms of TA and stuff. But the fun comes where essentially you have some people, they'll have 10 stacks of just $100, right? Whatever, just in front of them, and now they know that 9 of those is going to go
right.
And they'll throw them on high leverage positions, but it's the 10th one which makes them the money, right?
Yes.
And I mean, it's probabilities and it's whatnot, but it's insane. But that's what people do.
No,
right?
you're exactly right.
Yeah.
What you just said right there is true. That's how you would have to do it for some of those. Like, I mean, almost be like a penny stock, right? Like, put $100 on it and see. I got 1 million shares, and if it goes up 10 cents, woohoo! But if it doesn't, I lose $100, right? I
mean, it's my investment play, kind of, because I will, the investments I'm in this cycle, are a combination of high, mid, low, and ultra low caps, and the ultra low caps, they're just tiny amounts, right? But all I need is one of them to go, and then there's my boat, right? So that's the approach, and it's very unintuitive, really, to kind of look at these dollars in front of you and say, most of you are going to go, right?
But you're buying in, and you're just letting it. You're just holding it for whatever. Hopefully. So what are you mostly trading though? Like Bitcoin, ETH, Doge?
No. I mean, I will trade
Cookie. He trades Cookie. You know Cookie?
There's so many names. There's a million of them.
Not even joking.
I know there's so many crazy names.
Whatever's got a good setup, and that's the advantage in crypto. You have never-ending supply of setups. But as you said, in terms of the penny stock mentality and Bitcoin is king and all that kind of stuff, it isn't quite as simple as that, because all of those setups will just be invalidated if Bitcoin goes in the wrong direction. So it is you do have to approach it with Bitcoin is king. What's Bitcoin going to do? Now I've got a setup. Now I want these two things to sync up. Just like today, we're expecting Bitcoin to come down, which is the reason why we're entering a short trade with Doge. Not because there isn't a short setup on Doge. There is, but we need Bitcoin to have it as well.
Thanks for pulling up Bitcoin. I was just going to look.
No, this is not. This is the pound US dollar.
So do you have to, Paul, you spend a lot of time every day searching or going through? Is there like a filter, like with stocks?
Idea. You have no. No idea.
Like another 10 years, Paul. Then you'll realize, you only need to focus on a couple of markets.
I used to go crazy every day making my lists.
It's crazy. But anyway, I wanted to just show. We focused on the Euro Australian dollar. I can't remember. I think Michael was with us in the session. And I just pointed out the level of interest, which was the 61.8 Fibonacci retracement level, because there was confluence on that support level there as well. So it was a beautiful bounce up there. And that was a beautiful little trade. And on gold, I'm a bit, Yeah, I'm a bit neutral on gold. I don't think gold is setting up for anything nice, but maybe more short than long, I think, because of that resistance above it. We'll see how it behaves there. But I would like to get some better price action. If I just zoom out, you see the 3 touch here, the diagonal line. We broke out of it, we came back down, and then we touched it right at the bottom.
Yeah.
Beautiful support, and then we broke that resistance. And when it came back down, I was hoping for it to find support, but it just doesn't. Okay, it just broke below. So now it's like, okay, we now kind of in the middle of nowhere, really. Okay, maybe that resistance above, but then at the same time you've got this higher low. You see, it's not clear, it's not clean, it's not nice. So I'll
don't diddle in the middle. That's what I
don't diddle in the middle. I like that.
Don't diddle in the middle.
It rhymes with everything. Yeah. So that's gold, and then the pound US dollar. Now let me just have a look at the.
Are these all things that you trade, Jannie? Are you?
Yeah.
You're an equal opportunist, man. You're everywhere.
I trade mostly just I look at 4 markets. I look at the pound US dollar. The pound US dollar is really the only Forex pair I trade mostly.
Okay.
It's very, very rare like that I trade anything else. But the pound US dollar, and then I look at Bitcoin, gold, and the NASDAQ.
Okay.
So they got almost nothing. Even though they have this,
you trade NASDAQ futures or these like CFDs?
Both.
Oh, okay.
So the futures will be on the much smaller time frames.
Yeah.
Yeah. But the CFDs is for more.
Do you get killed? Do you get killed on the spreads though? I mean, don't like.
Well, on CFDs.
Yeah.
No, you'll be surprised. Well, it depends. Like outside market hours, obviously, it looks like the spread is big, but it's not. It's just the ATR is dropping massively outside of market hours.
Yeah,
right?
yeah, right.
So then your the candles, the ATR of the candles are smaller, and then it looks like the spread is much bigger.
It's exaggerated in a way.
Yeah. But during the actual New York session, no, the spread is very thin.
Okay.
Very, very. Yeah, it's very good actually. Okay. Yeah, it's really good. So, what was I going to say before
Sorry.
Darryl rudely interrupted? No,
absolutely, I rudely. You told you.
No, I'm joking.
How dare you?
I do that.
I know you're
do
joking.
that a lot
but,
myself. All right. So on the pound US dollar, you see this horizontal line here. Okay, this one over here. This is a weekly resistance level that we broke out of. Okay, and then we came to retest it. So this was a beautiful setup. But this is also where I made a mistake. Oh man, I was not happy with myself. I moved the damn thing to break even.
So your resistance became your support now, right?
Yeah, like if you break out of obviously the trend on the longer time frames, which I won't be able to do it on this platform because there's not enough data on this Hola Prime MT5 platform. Yeah. But when you on the longer time frames, if it's an uptrend, right, and you break out of that resistance, then a retest is a beautiful play.
Absolutely. Right? Absolutely.
So that was just a beautiful, beautiful play right to that resistance. I'm still bullish over the longer term on the pound US dollar, but the fact that we came back down to this weekly support level, that to me signals weakness.
Yeah.
So we can probably kind of see the pound US dollar go lower. So we'll see how, but for now, again, this is very similar to gold. This is not a good place to try anything. Okay, this is not the price action is not clean, and we're not really at a nice level. Apart from the fact that we are close to this weekly resistance area, which is now support. But I think we're going to go move lower. But I'll be interested in this 1.325 level if we get that. If I zoom out here, you can see that that's a very strong level with lots of touching points, right? So we'll see if we can get that. But I prefer to take trades to the upside because I'm still I'm bearish on the dollar over the much longer time frame. So I would look for setups that kind of aligns with the decline of the dollar index. Obviously, that's going to come with corrections as well, right? The dollar index is not just going to go in a straight line.
Yeah, of course.
It's going to like wick and do this and that. So yeah, I'm still bullish on it, but I think in the short term, the pound US dollar is a little bit bearish. And then yes, the NASDAQ. So this is what I want to show you. I constantly expect, as I said earlier, this thing to fall short, right? So this is the 4-hour time frame. So that's the all-time highs. And I've been sitting on the side for weeks now. Let me show you this.
Why you want to wait for a retest to the all-time high? Is that what you're waiting for?
No, I mean, I think like I mentioned this in one of the sessions. Like I think the all-time highs is going to be even more messy than this, because all-time highs can be, like I said yesterday, is a death trap, right?
Yeah, it is.
So a lot of people will start buying, and then the institutions will just like rip everybody apart at those levels.
They will.
So
they'll take it up. They'll take it back down. They got to move a lot of money, right? So they don't care. They just need to build their position.
Yeah, exactly right. So this was the ascending triangle that I was not interested in trading, and the main reason for that is because you've got the all-time highs just above it.
Yeah.
Right. So it looked like at the time we are breaking out to the upside, but I mean, good luck with that. You've got the all-time highs right above you, so that's probably the worst time to get into any position. I'm expecting it like this. I've been expecting it actually when price was over here already. This is like a month ago, or more than a month ago, like maybe 5 weeks ago, for price to just give us that divergence. Okay, it looks like it wants to make the all-time highs and then maybe give us a divergence there.
You see your big V down at April 7th, right? That's the Trump tariff crap that went.
Yeah,
it just. So everything after that, it's almost like. It's almost like the market reset, right? It's so noisy and there's a lot of fear. There's a lot of everything. And all these people all these retail guys, they keep buying the dip. It's been working for so long. They don't know that there's another side to it, right? They keep, Tesla's down, I'll buy the dip. Nvidia's down, I'll buy the dip. One of these times they're going to get smoked out. But
yeah, I mean, it depends on how you play it. Like if you,
of course.
Yeah, if it's more investing, that's fine,
right?
Because you don't trade because there's no leverage there, right?
Right.
So if you don't use leverage, then or very small leverage, then I'm actually with Paul. You don't need a stop loss, okay? Because investors don't use stop losses. That's crazy, okay?
Correct.
It's like when you start to use leverage and high leverage, you better have a stop loss because it can get ugly very, very quickly. So, but with small leverage, you don't really need a stop loss. It's true, right? Just like you don't have a stop loss in your investing. But anyway, God, what was I going to say now? I lost my train of thought. Yeah. Did you guys listen? Let's see if you guys listen.
We're talking about the all-time highs, and I don't know.
That was like 5 minutes ago.
No, Darryl. You were just talking about it again.
No, okay, but
I was talking about the V with the tariffs coming back up. So I don't know if that jogged something for you.
I just want to also interject. This is someone checking on Robert because he's been getting coffee for like 20 minutes.
Robert,
where do you see? I don't see anything in the chat. Maybe it's because I'm a guest, right? Maybe
switch to comments.
Comments, go to comments.
There's. I was in private chat. I'm sorry, guys.
Hi, Lola.
Can we have proof of life on Robert, please?
Yeah, we're concerned about Robert.
I see. Yeah.
Oh, he's asking where about you. Oh, maybe he wants to hook up with you. Not like that. I mean, like.
Maybe it is like that. No.
Maybe it is. What a compliment.
All right. Okay. Anyway, I think on the NASDAQ, the point I'm really trying to make is that it's such a it's not a good time to do anything. Even though the all-time highs, I think, like, just to answer your question, what would I like to do there? Ideally, what I would like to see is for the NASDAQ to correct, to this level here, which is going to be different than the futures contracts, but the CFD value is 2351. 2351. So that would be a very, very good spot. Oh, that's what I was going to say. Difference between investing and trading with leverage. But Tesla is actually a very good investment opportunity for the long term.
Agreed.
because they're not just a car company, right? They are in 8 different
Automation
sectors.
and innovation. Yes. Yeah.
Energy storage and
Yes.
data and like this robo taxi, which is
Yes.
a completely new industry, and they've got Optimus, and it's going. So Tesla is a very, very good investment for sure. But I'm not sure about But if you're going to try to trade it, I think you're just going to you're not going to get the same results. Okay, like compared to like if you just like invested and leave it for 2, 3, 5 years, you're going to make definitely a lot more money that way, right? It's the same with like the shorter term swing trades as well. Like for me, like with the swing trades, like it's as close as you possibly can get to investing, but it's not investing. Do you understand what I mean? It's like where you can trade with leverage. With again, like and then there's a point where you don't use leverage anymore. For the investing, but that line. Sorry.
No. I mean, you're just jogging a number of things in my head. I mean, the problem I remember having with stocks paying taxes in the U.S. and everyone is different based on where they live, what their country is. But with stocks here, if you're going to hold it long term. Over a year, that's great. You got the, long-term capital gains benefit. But if you're trading it, you're going to get hit with a short-term capital gain tax, which is, substantial. So if you're going to trade that, anything less than a year holding it, it doesn't make a lot of sense. And then if you got all these wash rules and you've got all this other stuff when it comes to end of the year, it's a real nightmare. Futures doesn't have that. That was another nice thing with futures. There's no benefit whether you hold it for a second or you hold it for 10 years. If you want. It's
that's true. But you have that? What is that rule? You're not allowed to trade more than 3 trades or something like that.
That's pattern day trade rule for stocks. I don't have that problem with futures.
Pattern day. Oh yeah, that's such a. I mean,
it's a crap. It's a. I think it was.
It's a babysitter.
I think it was part of the Dodd-Frank Congress stuff that came out after the credit crisis 07, 08, and it was to protect the investor. Right. It's almost like also the, whether they're a sophisticated investor or not, kind of thing to protect them against themselves. It's crazy. Yeah, I think it's something like you can't buy and sell more than 4 times in 5 days or something like that. And then you got to have at least $25,000 minimum in the account. And
for me, it's the unrealized gains thing, right?
That's the problem with the wash rule I was talking about too. At the end of the year, so now people get around it by you could sell at a loss, but you could buy it right back. If you do that within 30 days, depending on your state in the U.S., it's not just federal, right? So it depends on what state you're in. There's ways to get around it. It's a nightmare, though. If you're an active trader like me, if you're doing equities, it would just be nuts.
Yeah, that makes no sense to me. The unrealized tax gains, or what's the word? Because I mean, if you're up 20%, what if you drop 5% tomorrow?
Yeah, they owe you money, I guess.
Well, but if you're going to start taxing people on unrealized, then what's the point of holding the damn thing? It's like they're going to have to sell everything they're going to have to sell a lot of their assets to pay the tax.
Yeah, it's inherently
it's terrible. It's terrible.
It's not very clever. Yeah,
no,
for sure.
Let's
just say that. Yeah. Okay. Well, we don't like you said that's not a problem with the ES or futures rather.
Yeah.
But I mean, even for longer term investing, will he prove it? Greetings, everyone. Nice to see you again. Is it will he prove it?
Or will he prove IT?
Will he prove IT?
Or IT? I don't know.
But if it's what is it? What are you trying to prove? Will we prove? What is it we're proving? Great names, people. Keep it going.
Yeah, it has to. Will he prove IT? Okay, prove.
Will he prove it? I don't know. Will he? What?
Provolt. Maybe it could be Provolt. No.
Yes.
Willie,
It could be, but
Willie Provolt. All right. Anyway, Willie Provolt T.
Greetings, my
Sorry
friend.
about that.
Nice to see you.
Yeah, it's nice to see you again. Yeah. But anyway, so to get back to the markets, I think I've covered the pound US dollar. So for me, everything is basically out of, like, the pound US dollar is definitely out of play. I'm waiting for a position to go long because that will line up with the bigger picture. But I think right now we're gonna see a bit of correction, right? And then on Bitcoin, obviously bearish in the short term. And if this 98 level doesn't hold, then I think I don't think this 50 level here is going to be a strong support level. I think the next level of support will be way down here at 89.5.
Yeah, it's because like when you get down there, it's like the buyers are thinking, well, why am I going to get in here? There's more below me, right? So that's just what it's going to be.
Yeah.
They're going to wait
also
for Michael Saylor to come in and bail them out and buy another $1 billion worth.
Oh yeah, or whoever. I mean, what was it? Not Microsoft.
I mean, yeah.
The Japanese investment firm. I'm sorry, I should just bring a news article on it. They've set a target.
SoftBank? Was it SoftBank?
I can't remember. I'll go and check in a minute. But they have. Okay. They have. Let me find it so we look like we know what we're talking about. Hang on. Just let me find the video. We just find it. Metaplanet, right? So Japanese firm Metaplanet have, and this is a really good point about Bitcoin, right? So they have now surpassed Coinbase in terms of holdings for Bitcoin. Oh, really? 10K. But get this, they want to have by 2027 210,000 Bitcoin, and they're already seeking investors, which is an insane amount, right? So when we talk about safety nets under price action, I mean, you have all of that to undo before Bitcoin can really do something crazy. I mean, it's just, so with Bitcoin, this is the difference between the altcoin market and Bitcoin. Right now, the altcoin market is just, I'm not touching it. But with Bitcoin, every dip is an opportunity, and that remains the case. So all of this nonsense in the world, which is terrible and terrifying and horrible, you know, I mean, there's so much going on in your country, around the world, in Europe. But you know, for Bitcoin, it still remains an opportunity, somewhat callously, I think. But that's the thing. So, and it's the only thing really propping up the crypto market. That's what people need to realize, right? The king is doing all of the work to hold things together right now. If the king gets felled, what happens next? So, you know.
Do you still think, I don't know, no, let me remove the word still. Do you think that AI is going to crack the Bitcoin code, the chain?
I think quantum computing quantum computing.
Yeah, that's a bit of a concern.
We're a ways away. We're just trying to get functional systems which can be scaled up. But when that happens, and it will happen, there's going to be problems, not just with Bitcoin, with all encryption services and providers, right? And there is a race under the hood to protect Bitcoin from this, to modify the network, to ensure. So, but yeah, I don't think it's going to happen soon, but I have no doubt that there's a serious possibility that in the future, at some point, there'll be you'll wake up and Bitcoin's just gone. Right.
Yeah. What about the blockchain? Does that affect the blockchain, or you just? I mean,
yeah.
We're just talking about the nodes and all the.
A hack would decimate it. It would.
Yeah. If they hack it, it's over. It's gone. It's gone. Because that's really what makes Bitcoin so. That's the reason why it's been around for so long, because it's proved itself to be secure. Right.
Proof of concept.
So,
and if we lose that.
If you lose that,
we don't even have. This is the thing. You don't even have to actually break it fully. You just have to break it a bit, lose confidence in people, and people will lose confidence in it, and then they're moving on to something else. And that might be when Ethereum, which if you look at the use case in terms of it's obviously it's blockchain work, and there's a whole conversation about centralization if Ethereum gets too big and all those kind of stuff and all that kind of stuff. But that might be what will do it. So. You know, it's the old adage, all good things. But how long will Bitcoin be around? hopefully well into the 2030s and 2040s, but there's serious threats for sure.
And there's all these central banks that want to do stable coins and stuff, right? They're all looking to, not all, but many of them are looking to do that.
And that's the other thing, the slow death of institutional adoption, right?
Yeah.
Will banks make crypto just another means of banking, or will crypto revolutionize banking? Those are the two things.
Yeah.
All right, Paul, you've got a couple of questions here. Paul, what's your thoughts on the PI coin? Is that Pi coin? Pi coin? There's and then the other one from Lola. Paul, can we take a look at FXS? Buying at 1.968 is a good idea, question mark. Maybe you can share your screen.
If I may ignore Pi, because we don't provide it a lot of Prime X, if that's okay.
Yeah,
but FXS we do. Let's just have a quick look. Let me try and remember. I need to share my screen. No idea what FXX is doing. I know it was a setup. See if I've got one open. Here it is. Oh yeah, so here I've got a setup. Here we go. Right. Well, can we see this okay, folks?
Yeah.
Yep.
I mean, we can all see that the bullish setup has just been invalidated. Not entirely, but we're still in this pattern. But you know, the premise is this support area for a buy with confluence with the 200 MA on this higher time frame, the 12-hour. That was it. That was the premise, and now we've lost one leg of that approach, and it looks like we're probably going to break down to this level. So if you're, what was the price point? 171.
No, 1.1968.
Yeah.
19.
Oh, yeah, sorry, 1.968.
Yes, that's the next line in the sand. That's what I'd be waiting for. But the issue with, and obviously, you know, we've had this breakout bounce, which had confluence with the 200 MA, and then we've moved up from there. So just bear in mind.
But it could go further, right?
Yeah, it could go further. So if there is a bit of ambiguity in this range. If you do look previously, it's not the, it obviously is resistance. It obviously has acted as support, but it's acted as support with confluence, right? Meaning that, you know, this ambiguity is a warning sign. If it comes back down here, okay, so your first touch following this upwards move, probably going to get a bounce. There's a trade there, especially if you have extremely oversold conditions, which may happen. But you're not going to have the moving average. You're going to have resistance overhead. So you're going to have to find additional confluence. So in these scenarios, you need to be very strict about what you want to see. And you may decide that a hard buy at support isn't the right play. And you may want to see something like this, right? Before you enter to either come in here or come in there. So you've got some kind of confirmation, because you don't have confluence, right? Otherwise, you may just bounce here. You may get that, but then you might get this.
That's
right. So it's a good place. That's the next place to come in for sure. But very strict criteria at the moment, because look at all this, right? It could come even lower, right? So maybe scaling in might be part of your approach as well to minimize the impact on capital. But yeah, so there's a play there, but do some work is what I would say. Yeah. I'm feeling a bit. Let's just have a
Paul, what's that yellow? What was the yellow and the red lines? Are those moving averages?
Yeah. So sorry. Let me just find that again.
No, it's okay. I mean,
good luck with that. Look at
you have them on all your charts probably. So I was just curious what they were.
Hang on a minute. Oh no, what's happened to FXX? It's all gone. It's all gone terrible. Let me just close that down. Find it again.
Like this is there's the one with the Wonder Bra, and then there it is.
I got rid of the Wonder Bra. I didn't want to cause any problems. jokes until they're not, right?
Paul likes to dress his charts. You know, he puts shoes on them and all sorts of things.
I don't like to dress my chart. My charts.
You shorted your shorts.
Oh my god! Crazy.
Do you want to get off quickly, Paul? Just to kind of
yourself up? But not for that reason. All right. I don't like to dress them, but you like to interpret what I've done to my charts as me dressing up, right? So that's the difference.
That's true. That's accurate.
This is the 50 in red and the 200.
200 in yellow. Okay.
Yeah, that's pretty much my.
Okay.
And I mean, it depends on the setup, but I'm more interested at the moment in these two typically. And if I need to,
I got you. Yeah. No, that's fine. I was just curious what they represented.
Yeah. Well, look, I'll take a quick look at Pi. We don't provide that on Hola Prime, but let's just have a quick look just from a point of principle to see how the altcoin market is faring. Is this it? Pi network? Pi USD?
PI coin.
Oh, crikey.
Oh, man.
Let me just, it might be BitGet Pi. Well, you know, there's the floor. We're at it. So there's a buying opportunity, but it's not looking strong, is it? So, and this is just a 12-hour. So there may be something, but right now I wouldn't touch that. I wouldn't touch that just on first glance. But there's always a trading opportunity. And the most important thing is I could spend another 20 minutes on that and I could find an opportunity potentially, right, which is coming down the pipe, right? And I can plan for it and I can assess it. But there's probably going to be better setups. And the most important thing is that if you do get to the end of the 20 minutes and you still haven't found a premise, then you mustn't force it. You must just move on. So when you see me being very kind of, nah, it's because that's how you need to be, right? Because you want a setup which at first glance is like, ooh, not which is like,
right? You want to go for the low hanging fruit, the easier ones that are obvious, right?
Exactly. It needs to make you sit up straight and go, there it is. But even those ones don't always work out. But that's exactly what you want to see on your chart, right? It needs to be clean and just very easy to read, easy to clean read. Like if you don't get that, just stay away. Okay, Robert says you almost made me spit out my coffee.
I don't know what I know, I saw that.
that would be terrible, Robert, because you just made it, right?
But I don't know whether that was in reference to the Wonder Bra or the Sharding. I don't know.
My bad.
Probably the dressing of the charts. Probably, I don't know. Yeah,
I know I'm going to get a message. I know I'm going to get a message like over the weekend, like, Paul, did you swear on the live stream? Did you say something inappropriate? No, it was Jannie.
Just blame it on me, the new guy.
That's never me. I never say anything inappropriate ever. Do I? No. I mean, the Wonder Bra
was just a bit of fun, right?
Wonder Bra is just a piece
women's
of
lib
clothing.
I mean, come on.
Yeah,
we're supporting
gender
rights.
But that chart does need a Wonder Bra. Did you see? It is not. It's very.
What are you looking at this week, Paul? Well, I've got 2 Wonder Bra setups.
Really? Okay, I wanted to look at the dollar yen quickly. I want to get your thoughts on this. Right, it's not something I trade, but we've got a couple of minutes left, so let's have a look at this. What do you think about Paul? You'll remember this. We just kind of identified a second touch there in that resistance, and it's not really a strong diagonal line, in my opinion. It's just might as well just delete this. It's more about the static levels now, the support and resistance. So it's obviously we broke out of this nearest one, and then there's the next one, and then this is the next one. Is this something you'd be interested in, or what would you like to see before you'd pay attention to this chart? Because I think, just for a little bit of context, the overall bias is bearish, so you want to look for a short. Okay.
Yeah, I'd be bearish.
So what would you? I know it's not that straightforward to answer.
I don't know. It might be in a good position right now. I'm trying to see some diagonal resistance. I can't quite get my eye on it.
I can draw this one. Yeah, that's a pretty. I don't know. No, you see, this is why it's called discretionary support resistance levels, right? Because some people will draw it like this, other person will draw it like that, and the other one will kind of connect it here, and it's very much nobody's gonna. That is why. But anyway, I don't know where to draw this thing. There's no diagonal proper touch thing. Yeah, you can see that.
I was thinking in the middle of the price action ascending, but I can't see it either. There's nothing there.
Do you guys look at volume? Do you consider volume in any of this stuff? Like,
always.
I mean, volume for me is useless in Forex because there's no central kind of exchange.
Okay.
Definitely for me, volume. Is
me too. But I'm just I'm thinking here, like if you're seeing volume either increase or decrease substantially based on what the average has been on this latest bit, maybe it'll indicate if it's gonna fall and go south. But what's that last candle? Was that last candle green? I'd probably wait to see if it comes down a little bit. If it does, I'd probably go short, but that's just me.
See what I can see, but just straight off the bat, is this
are those 4-hour candles?
Yeah.
Okay.
So if you look at these FIP levels, I'm pretty sure that was a 61.8 touch. Yeah, you see that? That's just a beautiful rejection of the 61.8, and then, but it didn't quite go to, it didn't quite take it out. It didn't go quite to the lows here. So, and now it's back to the 61.8. So that to me says that the support or this resistance is pretty weak. So it can probably move even higher, right? So maybe for that reason, that this resistance level would make more sense. Yeah. This one, yeah.
If it ever gets to that. But
yeah, look, but that, yes, if it ever gets there, yeah, for sure. But like the thing is, if you, as I said, I gave the example on Bitcoin as well. You play off a 61.8. If it plays out from that level and it goes back there, it's weakened. It's exactly the same what happened with Bitcoin, right? It played out from the 61.8, but now it's coming back here. This support level is not nearly as significant anymore. Okay. It's
difficult price action to trade, right? Because the thing is, you can obviously say this is the ideal entrance area to short, but then if it goes up too high, you're all of a sudden engaging with the bullish context again.
Yes, that's of course. Yeah, no, you're right. You have to kind of look at the big picture, and not lose sight of price structure at the same time. But you know, it's we'll see when we get there if everything's still is still in play. All right, guys. Anyway, we've now reached the end of our session. Darryl, it was great to have you, man. It was very nice.
A lot of fun, gentlemen. It was a lot of fun. I'll get my platform up and running. I'll work on it this weekend, and next time I'm on, we'll have more concrete stuff to show.
And hopefully by then my other Doge position would have entered as well, and we have something to talk about.
Yeah. Okay. Great. All right. Robert, Lola, Gino, Willie, Provalty, Prove IT, and everybody else watch. Prove it.
I think it's
and everybody else watching was great to have you. The next session starts in half an hour. But from us, have a great weekend, and see you next week. Cheers, guys.
Thanks, everyone.
Just
bye.
Hello, Iris. Hello, Aymane. How are you two doing?
Hi.
Good to see you again.
Yes, happy to be back. How are you guys doing?
Yeah, very good. Very good.
Very good.
Had a very busy day. Couldn't trade, sadly. But
you didn't trade today?
No, I had no time. I literally just got back to the studio talking 10 minutes ago. My hair was a mess. I had to quickly, but it's fine. No trading for me. But maybe in the session, I might get a trade in. Who knows? But how about you guys?
I traded a lot today.
Oh, wow.
I traded London, and it was really one of the first day again that I was like, wow, I see my model. I traded my favorite 10-4 model I talked about last Tuesday, and it presented itself today. I had a news candle trade today, and I had my breaker retest trade in London session. And one of the colleagues, she recommended for me to start recording my trades, and I started doing that. I never used to do that, and I love it because you're talking to yourself and getting into it. So everything is recorded, but yeah, no, I had a lot of trades, and really I'm very happy with the way how it went. And remember that we talked about the you call it the weekend gap, right?
Right. Yes. Yeah.
And remember that when we were looking on Tuesday, I don't know if you've seen it. That when we closed the session, it went exactly to that week. It just tapped it and took off again. And I had another trade today. That weekly candle, the news candle. I was aiming for
0.5. The 0.5, I think. Yeah, you showed us last time. I think 0.5, like
the standard deviation.
Yeah.
No, it doesn't really have to do with the standard deviation, but it was like for us, we call it an NWOC. It's an indicator, so I have them automatically on my screen, and I use older ones. Well, if we can go over some trades if you like to, but I'm curious about you. How do you do?
For me, like no trades. Most of the time, I don't trade Fridays, so for me, it's tricky days. That's why I try most of the time to stay a little bit away from Friday. I didn't take any trade today, zero. I watched the charts. I saw like we were going bullish, strong, and then at some point we flipped.
Yeah, but now.
But
I don't expect too much of maybe of this session anymore because we had a lot of moves and we already retraced into the range. But yeah, no, I trade for you guys then basically today.
Perfect. You saved the day, Iris.
No, I'm very happy because this today was I really felt like in the flow, but I think it's sort of like now I'm like I don't think it's going to be really that easy anymore. But yeah, and I'm really happy, and let me know if you want me to go over the trades.
Please. Absolutely. That would be amazing.
So I recorded a few, but some are really long, so I don't know if that's wise to do that, but I can just go over the trades and then what do you prefer?
However you prefer. I mean, you can definitely go over the recording. I mean, if it's really long, you can kind of like skip forward a bit and
I can do that.
Okay,
let me let's go into London. Let's go over. Let's start with London. I need to share my screen, obviously. Hold on.
I also want to say good morning, Robert, as well.
Is Robert here again?
Robert's back. He goes, I made back today what I lost yesterday. Well done,
Robert.
Very good.
Good. That's good to hear. And maybe Robert can type in what he traded as well, because I'm curious what you trade. Because you're not.
I think the NASDAQ.
Right? Yeah, I know he trades NASDAQ, but yeah, let us know what you trade, Robert. What you traded exactly. Okay, let me just go into.
Yeah, NQ.
Yeah, NQ. Yeah, but what did you trade? What time? Tell us your setup. Or I don't know your setup. Maybe the guys know, but I don't. Okay, present and
Sam, any
Any preparation for your birthday, Sunday?
Yeah, I'm going to a nice spa. So that's going to be nice chill out. I thought I'll book myself in, get the whole treatment. I'm going to come back like a new person, reborn.
Wow.
But apart from that, I haven't really got anything planned.
Okay.
Do you see my screen on the 1 hour?
We do. Yeah.
Okay. So what I highlighted in the 1 hour was this breaker. So that was my confirmation. So right over here, you see. Are you guys aware of the break? Because I can talk about it. But do you trade? I don't think you trade breakers and stuff like that, right?
No. But please explain. Yeah.
No. Okay. So yeah. So let me just rephrase. So a breaker is an order block, and when it's activated, like when the close is above the breaker, then the order block becomes a breaker. So that means in this case, you see these bullish candles. So they become, it's a bullish breaker, and it's on the 1 hour. And for me, once it's activated here, I'm waiting for a retracement or a retest of the breaker. So that retest was here because it doesn't go lower than half. But on the lower time frame, I had a stop out because it was in too early, and then then it went more down because you can see it's wicking inside the breaker. So for me, the retest was here. As you can see, the wicks are in here. But then we got the proper retest, and then I managed to get a trade. This is those green lines with the mid lines in it are the NWOG, so you call them weekend gaps. And I was aiming for this weekend gap actually from the breaker, because once you have a bullish breaker, I was expecting the move to be from here. So I was in the around 330-ish. I thought, oh, I'm going to get this trade now. But obviously I had to go down first, and then I had this move in the news candle, and I will show that one on the recording. That's a short one. So I was trading this in London, and then the news candle trade was around 8:30-ish. That was here, and then my 10-4 model. So it was, yeah, and I was definitely my 10-4 model. I mean, I just love that model. But I don't want to take too much time from you guys.
No,
Let
please.
me just go quickly. I'll show you the recording. Okay, so the breaker, I'm going to take this away. Okay, let's see. Well, let's do the recordings then, I guess. I have to stop sharing. Let me see how I do that. And there was one trade, and I said, "Oh my God, NQ, I love you." So don't laugh at me, okay? I already told you that I had a weird relationship with NQ. Okay, let's see. Present. How do I go to the recordings?
You can do it through that way, or you can share your entire screen and just play the video on your computer, if that makes sense.
Yes. Okay, let me just. So I've just discovered that OBS. Do you guys use OBS?
OBS for recording and streaming.
You do?
Oh, okay. I thought it was a trading thing. I was like, OBS. Tell me about it. I've never heard of this.
I just have to find a way to get it on my screen.
While you do that, I'll read out Robert's comment. He goes, he was watching the 15-minute Auburn's ORB and saw all the volume of the ORB was at the top. So as it came back to the middle and failed the bounce, took the trade down to the bottom of the ORB. Also use OBS and slobs.
What is slobs?
I'm assuming a different program. record screens and whatnot.
Okay.
But that's awesome. Robert got you got that nice short.
Wow.
Yeah.
Yeah.
Well, yeah, if you were
Nice.
bullish or bearish today, you could have been good.
Yeah, so because of that bullish breaker, for me it was bullish until the reversal. So it was good to have both ways today.
Yeah.
I'm trying to get those video recordings. Hold on, and then make sure that I am.
That's all right. Take your time.
There is a potential nice.
Do you see the videos on the screen? Are you seeing the
Not
videos?
yet. No.
How do I do that? Hold on. How do I? So you just see my NQs.
No, you've
screen,
stopped
right?
sharing completely. So you have to reshare again.
Okay. Reshare. I'm sorry, guys.
That's okay.
I only see present at the moment.
Yeah, present. Yeah, that's right.
Yeah, okay. And then I just do video file or share screen. Okay, share screen. I see. I got you. Okay, let's do it. I'm sorry.
That's okay.
There we go. Here we go. Okay.
There we are.
So you see my. Okay, here we go.
Yes.
Unicorn London. Is that a 30-minute? Okay, so I have to. That's a long one though. Just let me know what you guys, because I really don't want to take all your time.
All we see is the beige screen, nothing else.
Yeah, I have to open them still.
Okay, yeah, all right. I was just double checking. That's no problem.
I just want to make. Do you see a recording opening?
Not yet.
Do you see my London? Okay, so I've entered.
I can hear it, but
you're not seeing it.
No.
Okay. How do I do that?
Did you if you share the whole screen, so if you go to present, share screen, and then click entire screen.
I did that. Let me just do it again. Okay, let's go back. Hold on. Yeah, let me just close this one. Stop sharing. Okay, here we go. Oh. Now I lost you guys.
Good. Like if I can just show what. Oh, okay. If it's ready.
Yeah.
Yeah, I mean entirely. Okay. Oh, okay. Aymane, did you just enter a position?
Yeah. I answered.
Okay.
Like five
Aymane,
minutes
if
ago.
you quickly show yours.
Yeah.
Yes.
Since you're in a live trade. And then we'll get back to you, Iris, after Aymane.
Yeah, no problem. Live trading is more important than going back into all trades. So I'm totally for it.
No problem.
So basically, like after this big bearish candle, we took the previous candle low, close green, starts pushing higher. I still think we're gonna stay a little bit in this range. Maybe just take this high and come back again to the range. So you know, Sam, that I like to trade this sort of candles. Take the previous low, close green, continuation. We got similar here. Take the previous low, close green, continuation. And then on the 5 minutes, we saw like big push down, and then we took again the previous low, close green. And on the footprints, I saw this absorption, this absorption for seller here, buyers here at the top, candle open up with momentum. So the first, let's say, obstacle is this one here, those 2 wicks, because there is some buyers getting trapped here at the top. So I would like to see the candle open and straight continuation up. If not, I'm going to go break even, because I don't want this 15 minutes candle to close red. We could come back again to test this demand more deeper. So, and it's Friday, it's the end of the day, so there is a high chance if I see, let's say, momentum coming back to this area right here, I'm I'm gonna take the break even. If we take those highs straight away, I'm gonna take partials. So I am up like good 124. So it was a really
Very
nice
good.
entry. Yeah.
Yeah, no, really nice entry.
Yeah.
Are you doing
Sorry,
how many
Iris.
contracts are you doing?
So this is actually Hola Prime platform. So it's CFD. So it's
Oh, you
CFD.
do.
CFDs.
It's
It's not
CFD.
future.
Okay.
Yeah.
Gotcha.
This
Yes,
one is
that's
CFD.
100. It says, yeah. Okay. Yeah, it's the same. Yeah,
Yeah.
doesn't matter.
Oh,
Oh, there you
nice.
go. Well, it's
So
a
we
nice
broke.
move
There
up.
we go. Look at that.
Good for
I think your
you.
TP is about to be hit.
We're gonna
Yep.
secure something. We took the
Beautiful
highs, so
trade.
let's secure 3, and then
Well,
we move this
they're
to break
beautiful.
even.
Equal. There is some equal highs at 21,920. Do we have the same levels on the CFDs? Are the levels the same?
It's similar candles, let's sort of, but I don't think no. There's a little bit of difference. You can see here on the CFDs is 21,681, but
gotcha.
here
Yeah.
you can see it's 800, like 200-point difference. So
Okay.
yeah,
Yeah. The price is different, but the candles are pretty much the same. Yeah.
Like it's looking like it's gonna push more. You can see this 112 at the bottom of the candle. So we have 3 minutes left with this big wick. There is a high chance we're gonna come take the highs again, this highs. So it was a good one for a Friday. Oh, that's
So what I
It hit
see on the ES, which I'm assuming there's a huge cluster of buyers at the top being trapped right now on the ES. So I think
I'm
it's,
getting short, actually. I'm getting into a short.
So I think it's the reversals there. But you already took your partials. You're at break even, so that's
there is some sellers entering now. You see some before it was 104, I think, plus, and it switched to minus 131 at once. You see here?
Yeah.
Like when I just showed it was 102 at the bottom, and then it means there is some maybe minus 200 like sellers, 200 contracts enter straight away, and they flip it from plus 102 to minus 131. So it was the good decision to take partials here after the break.
Definitely.
So I'm in a short right now.
Okay, awesome. Do you want to share the screen?
Yeah, sure. And here we go. Present and share screen. Window. Yes, it should be this one. Sure. There you go. You see my trade on the screen?
Give it a second. Yes.
I have to double check. Okay, good, because I've got. Okay, so why? So midnight is right over here, and this orange is a first presented for value gap from the London session. And because it made that beautiful wick, it didn't take this liquidity, but it took out this liquidity. So for me, it was good enough to enter the short. And I am still aiming, but I might be stopped out. But I've got some profits today, so I do have some room to. I'm aiming for this little gap here. So I might lower if I see it's going lower, I might take my TP a little bit lower. And we've got the weekly open here as well, which is a draw on liquidity. And as you can see here, we are also bouncing around in another one of those weekly in those weekend gaps. And I'm actually hoping that it just goes below that. But it's Friday. It can be very tricky. So I might be fooled here. So let's see. Yeah, and then again, actually, to be honest, if I look at this, if I go and do my breaker theory, then I'm actually going against myself, because if this is a bullish breaker, we had a retest here, and then it technically could go back up. But I'm more bearish than bullish right now. But we'll see. I might go
I-
out sooner.
I would agree.
I think it's a
bearish.
good setup. Right? Mhm.
I think it's definitely going down. 100%.
Yeah.
I think it's going down, in my opinion. Just based purely on the footprint. Now I am looking at the S&P, not NQ, but let's be honest, NQ and ES, they do the exact same thing, right? So based on ES, I definitely see it going down. But it already has gone down. Whether that's as far down as it will go, I don't know. But there was definitely trap momentum at the top. And we are at the point of control.
Could you show your footprint?
Yeah, absolutely.
The thing with the using the footprint, Iris, is like the context change every minute. Now the way it looks like Sam said, they were, let's say, trapped at the top. There is big numbers, the big buyers at the top. So let's say it's trapped buyers, but context could change easily. Sorry, Sam.
I agree. Yeah,
That's
it's
okay.
a little bit tricky.
So if we look at the 5 minute, you can see. So in fact, let's go to the 1 minute real quick. You see how just as we got into this area, we got those big buy contracts getting trapped at the top, and then that instant reversal. So 400 contracts, 600, 500, and then instantly we got the sell pressure coming very heavy and very not even a bit of green, just sell, coming very, very strong. So to me, that is a clear, I would have happily got in probably at the open of this candle for a sell. To me, that's a clear, yeah, we're going down. But the thing is, to say how far down is a hard one, because if you go to the 5 minute,
I agree.
real quick, we had a very similar thing happen at the bottom of this, what we could say is a range. Sellers trapped, getting quite heavy, and then instantly the heavy buyers came in, boom, boom, pushed the market up for a bit. And now the buyers are getting trapped, and then the market's pushing down. So to me, we could very well be entering a kind of range where for the next, I don't know, hour or two or however long, we'll just kind of see, that area just sort of ranging. But it depends. I mean, if we break through the bottom of this range and keep going lower, then absolutely, then I'll be more bearish. But as a scalp, I would happily target at least, partials at the bottom of this range. But yeah, no, all in all, in terms of, there's so many, sorry, go on.
No, just
on,
I remembered, I think. I remember, I think on Tuesday, Iris said about the 21,685. There was equals, and we took them
the next day, exactly.
Yeah. Yes, yeah. So
I saw that
was
too. Yeah.
accuracy. Yeah.
I will definitely point out my
absolutely.
10-4, my model later on. Let's just have a look at the trade, because it's going quite well. But yeah, those time. The 10-4, but I did see those two. I think it was the day after, right, on Wednesday, that they took that level, and then we had the holiday, and sort of day after is always a little bit tricky. But let's see. Yeah.
So, I go on.
No, please. Sorry.
No, it's okay. I was just going to say we did open up today with a gap. Right here. So I wouldn't be surprised if that gap gets taken out at some point. In terms of structure, I mean, we have so many gaps in volume for the past few days, because we've been kind of going not sideways, but we're just kind of in a very sort of heavy area. So we have a gap here, we have a gap here, we had another gap here, another one here, two at the bottom here. So loads. And I mean, this would have been a beautiful trade once it dipped into this gap. A nice push down. We had that breakthrough, come back, retest into this area. Again, could have shorted it. So we had a few very nice potential trades today that could have taken. In terms of a buy trade, I would have to have seen how the volume profile would have looked in the morning when it was actually around here. But as for now, it looks quite nice. We did. I know the whole contract change thing. It technically closed if you switch it, but if you kept it, whatever that is, unswitched, and that gap from the contract change, it did completely take it out and then move up very quickly. So that was quite interesting. But this gap here that we opened up with, I do think it will get filled. Probably, maybe today, maybe, I don't know. I mean, that's impossible to say. But so I'm with you, Iris, in terms of I think we are more bearish than bullish at this moment in time. But yeah, I really want to see it come to like this area right here.
Yeah, it sort of made it really worked its way through that. Let's show again. Hold on. Could you point that out again? I was just on another screen. What was your? Where do you want to see it come?
Right here, I would love for it to come. If it could go back just into this area here.
Oh, I don't want that.
I would love to short the market.
No, I wanted to go.
Not
I agree.
Whilst you're in the trade. Okay.
No, it's good. It's going well.
What I wanted to do.
Change your bias.
What I wanted to do is I wanted to hit Iris's take profit, then go up to here, and then I can jump in and short it. That would be ideal.
Yeah, but to be honest, I actually entered very quickly, so I was just looking like, okay, do I need to readjust maybe and take profit at a different level? Because obviously I don't want to give back any of my profits today. But
of course,
if I'm just going to leave it there, and I think I'm going to be my take profit 21. My take profit 21,809. Oh, I'm going there. It's going. Yes.
Is my screen still up? Really quick.
Yeah.
Have you just seen on the? Have you seen that? That's insane.
It's beautiful.
Yeah.
We just had over 1,000 contracts on one price level being sold.
Wow, I see it.
But this is crucial, though. This is crucial. If the market seems to be responding quite nicely to it, which is very good for you, Iris. But if the market struggles to push down and starts going above those 1,000 contracts, you can be quite confident these people are getting out, because that's a lot. Whoever that is very powerful, right? They've got a lot of money on the line. So, and then the market will most likely shoot up. Or you could interpret it. And I think I know what it is, actually. I don't think it's so much. No, I think it's these buyers here actually getting out the market. So all this heavy buying that happened pushed the market up. Think about where their stops would be.
We think like we're gonna create a new low for the week. Sam, you think we're gonna create a new low for the week?
Okay, so I'm out. It took my level, but so it was a great. I'm really happy to. It's such a good day.
Yeah.
But I did not record this one, but it's on this recording. But it's again a 4 o'clock level that is been hit. It was the Thursday 4 o'clock. So there's you hear me talk about the 4 o'clock a lot lately. So that it's just. They seem to work really well today, but also there's a long wick on the 15-minute, the 11 o'clock, and a long wick can it can be a rejection block. So if it doesn't go below half, it could also reject from half, and it's a fair value gap. Should I share my screen? Or
yeah, can I just say really quickly?
Go ahead.
Sorry. Yeah, just really quickly, and then I'll let you jump on.
No, go ahead.
So all these people who bought here.
Yes.
So all these people who bought here, all this heavy buying volume that we had, and the market failed to go up and break any high. All these people, they just got liquidated right there. Well, not liquidate, but they all got stopped out or out the market, and that's what this heavy 1,000 sell contracts is. That's all these buyers exiting. So the market is definitely going to more likely flood down quite aggressively. So if there is a pullback, well worth shorting it if we get a nice pullback. But yeah, that's all I wanted to say.
So Sam, where would you have entered on that trade? Where would you have entered on that short if you would have been trading today?
Okay, let me just quickly go back again. So I would have if I probably up here where this whole gap in volume is that I had drawn out just as we touched it, I would have probably wanted to short, or maybe even there, but it depends on the footprint. If I look at the footprint at that time and just have a look what happened
on that
where would it have been? So that would be here. Okay, so yeah, clear as day right here. Perfect. This is actually beautiful, right? So look at 1,000 contracts bought, right? 550, 400, huge numbers, 700. Then look what happens as we start getting below all that heavy buying, right? We get 600 at it. That's a lot of people getting out a break even. And then look at all the buyers getting liquidated, 900 getting out. You could definitely, that's a clear sign, jump in. You just had extreme heavy buying. They failed to push the market up. They're all getting out the market. The market's going to tank. And so it did. It did tank quite a bit. So that would have been a perfect place to enter. Ranged for a bit. They tried again, the buyers. Kind of failed pushing it up. They pushed it up a little bit. And then again, they get liquidated. So I would have definitely... I wouldn't have entered where you entered just because that wasn't really a zone where I was looking at. I was looking more higher up at this zone here. And we did kind of touch it just about. So I probably would have entered there. But if we get a pullback, 100% there's opportunity now.
You're going to get your pullback now.
Because that's confirmed it, like it's going down. Yeah.
Yeah. Nice.
Okay. Your turn,
interesting, the footprint. It's really nice to because it gives that extra confluence. So it's very interesting to hear about it. So it's almost at the weekly open. So we might get what you said. We might have a weekly low, new weekly low today. We never know. Still quite early. So Fridays we have my screen is on. Okay, here we go. Yeah, so on Fridays we have a model that's called TGIF. Thank God it's Friday. That means and it's fractal in a way, but you can also use it on the monthly candle. But basically what the model is, if a weekly high or low is taken out, then the candle it retraces back 20 to 30 to 40% back in the range. Sometimes it does not happen, and then you get it like in Asia, but sometimes it also happens already in Thursday. So if you have like if it takes out, it could also be a daily low sometimes. So that happened actually yesterday. That's why I was so like, are we going to get a TGIF or not? But if we do break the weekly low, if we might go a little bit lower, we might get a very nice retracement back up into the range later today. That could happen if that happens. But I'm actually surprised about the expansion move after such a big move already today, and we're just not used to that lately. But yeah, so it's interesting to see. But I had a lot of trading today, so I'm really like, okay, now I have to. This is time to really just be more careful now, and I just don't want to give anything back. Because it's been a good day, yes. So no more. The breakers have been broken, so it looks like we have more downside now. So we might get into this little gap here, and then see then the low. So these are all the weekly those NWOCs. And if you guys are interested to plot them on your, this is the indicator NWOCs, and then you can set how many you want to see. So weekly
yeah. Oh, that's really cool. I might check it out.
Yeah.
Yeah, because if you do the B adjust, then you don't see your you don't see the gaps anymore. But then if you have this on, then you don't miss them, right? Because yeah, as you can see here on that Tuesday, that was so beautiful that it just went back to that. Let me see, that was around 7 o'clock-ish. Let me see. Oh, that's too much information. Okay, never mind. Let's go back to now. I've got so much on those charts, guys. I'm so sorry.
It's okay.
It's just, I can imagine. So this is, I actually also thought we might hit the daily, that's a daily fair value gap. I thought, oh, that might be a level for today, but it didn't go that high. So, but we reached quite a bit. I'm happy to see the market a little bit moving around a little bit more than it had been doing.
I think it might actually close the opening gap today that we had. I think it will get there. It's got a lot of momentum.
And maybe create new low for the week, because like from what I see here, it's aggressive. It's the sellers are really aggressive. Like not much retracements.
Yeah. Well, I hope there is a retracement, because I mean it could make.
I seem to have some issues with the internet. Am I still on? Because I seem to have some internet issues. Do you still hear me?
No, you are here, but your screen's not. No.
Okay, I'm still here. Okay, let me just leave it like that, because I seem to have some, it's going in and out, so I'm happy to still be on.
So if I can just show my screen real quick,
yes.
I'll show you another thing. And this one actually made it even more obvious. So if I use Go charting, exactly where we reversed, if you just take a look at the delta, sometimes visually you can see the candle delta a lot clearer. If you just look at that bar there, sticks out like a sore thumb, right? Which is how big it is in comparison. And that was exactly the delta that caused that reversal. So a lot of buyers getting trapped right there, and then they've all just getting liquidated, getting out the market, all jumping out very quickly. There is an area here which it's just touched, but there's no way I'm buying into this momentum at the moment. Like after seeing that 1,000 contracts, I'm 100% only want to sell it. This area is a gap, so I expect a reaction to it. I guess we have had a bit of a reaction. You can see that wick as it touched it. The market pushed up a bit, but nothing. We might get a bit of a pullback actually, and then potentially I could short it, but I definitely don't want to be buying into it. In fact, if you actually look at the delta again, if I just make that a bit bigger, look at how low the delta did get to. It got to minus 529, but the buyers absorbed all of that, and it actually closed at plus 33. So that area just had a lot of absorption. So I do think it's going to take a bit more aggression for the sellers to really break that area, but I still would not want to buy into such momentum. And now I don't know how to actually make this smaller again. I can't find the little thing.
Could you check some like 620? Sorry.
Yeah. Oh, there it is.
620.
Sorry, what time?
6:20 your time. You will see this similar like absorption, big absorption of buyers. Like
5 minute or
5 minutes. Yeah, 6:20.
Okay, let me switch to 5 minute. Where is it? 6:20.
6:20.
Yeah, so very similar. You're right. If I just make this a bit bigger. There, look at that huge wick. We had plus 965 buy delta, and it closed all the way down at 248. So huge wick. And looking at the delta of candles with wicks can actually give you so much information, which is beautiful. So well worth, just keeping it up on there and having a bit of, using it as a bit of an extra added confluence. But yeah, you can even see like how the percentages spike. Again, very high percent can be absorption. So we are rejecting a bit from that area. I think finally we're going to get that pullback from that area, which is good.
Yeah.
Because that allows us to hopefully short the market.
Yeah, I'm thinking of getting back in.
An obvious one would be this 600 contracts right here, right? If the sellers defend it, sorry, Iris, you broke up and I couldn't hear what you said.
Oh, I didn't say. I just said I'm thinking of getting back into a short maybe at some point as well.
Yeah.
I think that would be a smart choice, considering
it's
the
so
momentum.
interesting.
In terms of structure, we're not really at any.
That footprint really interests me to combine that with as an extra confluence, like you said.
Yeah, 100%. I would say it's well worth having. I mean, even if you don't base like all your decisions on it, it's well worth having just as that added confluence. All I'm going to do quickly is check if there's any gaps in the middle created. Oh yeah, there we go. We get a little drop off of volume. It's starting to get created. So now I just got to check if there are any. So this is a gap now that was made. So when it gets into this area, I want to have a good look at what actually happens, because I could potentially want to short it here, or at least by that 600. So we're in that area. I want to see what happened. Okay, we saw that jump. So, load. I'm getting a position ready. Let's load it up, get ready for it. All right, we're seeing the sellers come in. You can see those numbers really getting absorbed. So it's well worth, I think, jumping in on a small position right now. A short. And then I'll have my overall stops just above that 600 there. If we get to that 600, I can add another half of that position. But then overall stops will have to be, I would say, around here. So if I just
okay,
draw
I'm just going to wait a little bit. I want it to go a little bit higher.
And then, yeah, I want it to go. I would ideally like it to go to that 600, because that would be an even better entry. But just in case the sellers get very aggressive, I can see them getting aggressive. The gap's now been filled, so this area no longer really matters that much. And another way I can check if there's any gaps is TradingView has a great volume profile tool. So if I just do the 5 minute real quick, yeah, and then do this. Okay, so I can spot the real gap is right there, which lines up to that 600, I believe.
There is a big cluster at the top, like 124.
Yeah.
On NQ, so it will be.
Okay.
I think it's a good one. The way it looks right now, it's we will see, let's say, a continuation down, but we have to wait.
So I'm very confident right now that it won't be breaking this area here, because that's the gap right there, like the true one. If you actually measure it out, you can really see how the volume is heavy there and then starts getting heavy again here. Here's the lowest part. And if you look on the footprint, where's the thing? Here it is. Exactly where that is. That's exactly where all those heavy selling came in, right? So that lines up beautifully with the theory. So ideally, although it is dropping a bit now, ideally, I would actually like it to go a little bit higher just to get that even better entry price, scale in even more. And as a target, as a TP, I think we might actually be closing this gap down here. So I think I might even do the low of the day, to be honest, as a target.
Yeah. I'm going to wait a little bit longer, and otherwise I'll just miss the trade. That's fine with me, because otherwise my R to R is just not what I want it to be for the last trade. So I just have to wait a little bit longer.
Yeah. I'm just going to set the stop loss and all that, just to ensure.
Yeah. I'm just going to calculate a few
that
things.
I'm covered.
So you think it's going to go lower than the gap and go? It'll make a new. I wouldn't be surprised. We might make a new weekly low.
Yeah, I think
or just
targeting the gap itself is probably the safest part. Yeah,
exactly. Yeah. So yeah, that's about 60 points now. Yeah.
$6.26. So I'll put my stop loss about there. All right, cool.
Maybe
so hopefully I can scale in again if we.
Yeah. If
I
you
wanted
could
to move.
Yeah.
Like
Sorry,
if you
guys?
could Sam just check the 15 minutes on ES, is it similar to NQ? Just I want to see some.
I'm on the 15.
Footprint or?
Yeah, footprint. Yeah, 15. Okay.
Here's the what does it say on NQ?
No, just on NQ, like there is 243 big cluster at the low, and very high volume, like 15,270. Could you check the volume on that candle? Like not this one, the previous one.
43,000.
Okay.
Huge volume.
Huge volume.
Massive volume, yeah.
What does it tell you?
We could see a retracement.
Well,
yeah, going a little bit higher. You mean? Okay.
Mm-hmm.
Yeah.
We could see retracement or even reversal, but high chance just retracement.
Yeah.
So,
yeah, I don't think it would be reversal. If I thought it would be a reversal, or even if the momentum wasn't as strong, I would have been looking to buy in this area here. But that momentum was so strong, especially how the sellers came in. I don't even want to I'm quite surprised it's even gone this high, to be honest. Like, because it was pretty powerful, those sellers.
Like especially as a scalper, like you don't want to go against the momentum. Like you see that strong momentum down. So
yeah.
It doesn't seem to want to go back further up, right? Because it's already in a fair value gap, in a bearish fair value gap, and it's just wicking. So it just could slam down at some point.
Yeah.
Yeah.
But sadly, I don't think it's going to get to this area, so I can't scale in again. Sadly, well, I might do. I'll set an alert. If you never know, the market might be. It does that sometimes.
It's Friday, so we never know. Yeah.
Yeah. Well, I am seeing all that buy pressure being built up at the top, which is a sign. We've got 400, another 400, 300, and it's going against them again. But that probably isn't new buyers. I think that's actually a lot of these sellers, as the market slowed down and started going back up again, a lot of the original sellers from that downward move are probably taking profit here. So, but it's not enough. Like if you're actually counting, like you can use cumulative delta, actually. This is perfect. So if we actually count, oh, wow. Wow. So the cumulative delta tells me a lot. I didn't even spot this.
Okay,
so
what's that?
If we look at the cumulative delta, that's basically the difference between buyers and sellers stretched out for the whole day, and it's like cumulative. So it adds upon itself. So it counts basically the difference between buy and sell contracts for the whole day since the start of the day. And if you look at here, there was 9,800 more buy contracts traded today than sell contracts, right? And then we had 8,000, and then every candle. But look how much it jumped here. It went from 8.5 to 10,000. So just in that alone, we had so much buying come in, and then 12,000, and then 13, and then 14. And then the sellers came in out of nowhere and wiped out huge amount of volume. We're talking 1.5, 2, 3, 4, 5 to 6,000 buy contracts were wiped out in that one move down. That's where that momentum came from. So, yeah, I don't think it's even going to get near to these buyers again, because
they're all wiped out, all taken out already.
We're still at 12K. So there's still a lot of people holding it, because it went from 8.5, right? All the way up to 13 in that little push up we had. So, we're talking like 5,000, 6,000, right? 5,500. And then as the market pushed down and wiped out so many of those buyers, we're still only at 12K. So only 1,000 of those contracts have actually exited the market, meaning there's still a lot of these buyers are in a big drawdown right now and are probably sweating. They're probably not having a good time. So I think they're trapped and truly trapped. So
okay, so
that's interesting.
I was so close to be one of them. Once it drops
back to like 8,000. Yeah, you were technically one of these people at one point, but you did the smart choice and got out here.
Yeah.
And if we look at the depth of market, yeah, I don't really see anything on the depth of market. No big contracts, anything like that. Pretty standard stuff. So, all right, cool. Well, we'll let that roll. I've never seen the cumulative delta be that obvious before, so that was really awesome to see.
Wow. It's a good day to see. It's giving us good information today, the market. That's right. And Q's been a good girl today. Oh boy.
Yeah.
NQ is always good.
Yes. But I think
Thank
both
you.
ES and, they're just brother, sister, they are just both. And, with ES, the good thing with ES is that, each point gives you more money, so it doesn't really matter which one.
Yeah,
that's very true.
Like I don't know, guys, if you saw it, but now the sentiment, the market is more reacting to Iran and US and the world, because there was a lot of positive comments related to tariff between the European Union and the US and Canada, but the market didn't break all-time high. Like now the market is more responding, from what I see, it's more responding just to the war, or if US will join Israel in the attack or not. So it will be I think if it's continue like this, we could see the market is coming back to what we had on April, like this big volatility. We could see it coming back again. We will see. But
yeah, I think the overall sentiment will be, if the US joins the war or joins actually actively engages in warfare with Iran, then I think the world, in terms of like the trader sentiment, would be that this is the beginning of World War III, and I think we'll see heavy crashes, because how much does war cost an economy? Stupid amounts of money. Individual stocks, I'm sure Lockheed Martin will be doing very well. Do you know what I mean? I'm sure a lot of defense contractors will be making a huge amount of money. But as a whole, the average person, war's never good, right? So you're going to see, I think we're going to see it go down. But this isn't just like a regional war. This could be huge, right? Because Iran isn't just some random, little country. Something. No, I mean they've got alliances with BRICS, China, Russia. It's very dangerous stuff that's happening. So, yeah, I think the smart choice would be not to get involved, save the economy. But you're right. I think we could see some serious movement down if that happens.
And it's good to be conscious about this, because as a trader, it's all about we should adapt. It's not like until 1 month into the volatility and then we crash our accounts and then we start changing. So it's better from now, because we could have a Monday like volatility coming back again. The ATR is very high, so we should be aware. Like for me, it's like April. I switched to micro before, and I still trade even now micro, or I decrease the contracts. So yeah, it will be quite interesting to see how it will end up. But I think Trump will not be stupid and join the war, because politically also for him it's not good. But we will see.
Well, yeah, I mean his whole shtick was, no more wars, and he's gonna. That was like put America first, right? That was his whole. He was very adamant about that. So if he does join it, he'll be doing the exact opposite of what a lot of his promises were, and I don't think his voters are going to be too happy with that either. So.
But always, when it comes to Israel, they change everything.
Yeah, I wonder what they have on him. I think. Who knows? I mean, now we're getting into dangerous stuff, so we'll just change the subject. But yeah.
And Iris, if I may ask, what's the measure you follow when you see change of volatility, or let's say market conditions?
So to be honest, I'm actually surprised how the market moves today, and it sort of seems to be priced in a little bit. So I don't know if there was any macro news today, because to be honest, I think we had a good move to the upside, and then we're balancing. We might just take out the weekly low. It's sort of for me. I think if US might join just to do the cluster bomb and take out the nuclear, because it's better for the whole world if Iran doesn't have that nuclear bomb, because they also threaten the US. So I think not joining, just no boots on the ground, but just end the whole IRGC, and then Iran back to how it was before 1979. I think it will be good for the whole world, and I think if that would happen, but I just hope it will be quick. I just hope it won't be a long thing. So if the US does help, it is just helping with the bomb, because that's the only country that has the means to do so. So in that case, I don't think that really means they're joining. But if that happens, I think we will go. I think if that is done and IRGC is taken out, and there will become peace in the Middle East, then I think we're going to have really, it's going to excel the market to new highs. But then again, we just have to wait. But I'm surprised how the market is reacting, and I thought we might go lower faster. So for me, it sort of seems sort of, I don't want to call it stabilized, but it's not that. It's nice. We have nice moves up, down, but it's not really excessively to the upside or to the downside. So yeah. So was that your question was? Hold on, because I'm thinking I'm drifting off a little bit.
How to measure volatility?
No,
how I measure volatility with ICT, in ICT terms, you mean?
No, my question was more when you see change of like change of volatility, increase of volatility, or decrease? Are you change something in your style, or you keep everything same?
Okay, so yeah, for me today was a good day because I had like breakers and it hit certain levels again. So today it felt for me like there was more volatility in the market than there has been last few weeks. I don't know if you guys agree with that, but it felt for me like, oh, I can read it again, but I feel like I'm in the flow. I'm trading, levels are met, liquidity is created, it's taken, and we have some good moves and less consolidation. Tuesday, for example, was more consolidation than moves. So yeah, so I love volatility. Well, that's why I'm on the, you call it NASDAQ, right? So so I was like, how would that look on my resume? Alcoholic on NASDAQ. Yeah. So the moment we get more volatility, I get more. I do better in trading. So I guess then today will be better. We have more volatility than we had last few weeks. So I was a little bit surprised about today. Like, okay, was a macro? What's the difference macro wise? So I don't know. I haven't looked at the news. So sometimes I just stay away from the news because it's sort of depressing nowadays a little bit with all what's going on. But yeah, I do think, I hope we can continue this volatility. I love it. I mean, for me, volatility is just, it just makes my bloodstream go faster.
No, I agree. Volatility is like a day where there's no volatility. Like you almost fall asleep. Like nothing. It's just not moving. It's just being very. Yeah, you need that kind of
no adrenaline. Yeah.
Yeah, exactly. You want it to kind of do
action,
something.
Action.
Like even if I'm wrong, just do something. Just
do something.
I don't want to be. Just like. I don't want to be stuck waiting like an hour for like, to find out whether I'm right or wrong. Like just
exactly,
move. Yeah.
Move, go, and just make the pain as quickly as possible. If we're losing, it's a losing trade. Just get it out of the way.
For me, like when there is an increase of volatility a lot, like April and May, I take a lot partials. So partials when we have like increase of volatility, like I take partials quickly. So and that's one of the things. I decrease my contract size and I take partials quickly. So the moment the market gave me, because I'm scalper. So the moment the market give me something and I'm good with it, I take it. So
the less greedier you get, the more money we make, right? I mean, that's something I also like. So today in the London trade, when I was eyeing that new week opening gap, and it didn't get there until the AM session. But you start learning like, okay, I need to adjust my trade. I need to take it lower. It's not going to get there. So technically, it was a winning trade because I raised my take profit into my stop loss into profit. Yeah, but it could also be like I could have easily also lowered my my TP. So it was still losing. It was still winning trade. But so yeah, when the market is moving around more faster, and then it doesn't feel like, because I knew it was gonna go there because of that 15-minute breaker. I was like, no, we're so bullish. We had a retest. It needs to go higher before it retraces. So, and then on the news candle, it still went there. So that was really a weird trade. It was actually not really something I normally do, but I was so confident because I was already from 330 eyeing that level. So when you get markets like that you're already okay, but the time is not right. It just takes a little bit more time to get there. Then the levels are right, but sometimes you just need more time to get there. So that means we have volatility.
Sometimes also when you are happy with the profit, just take the profit. It's Friday, for example. Just the trade you were in right now, like if you took like profit, you closed the trade at the right timing. Now we are seeing like retracements back. So maybe if you stayed,
I'm looking at it
it could maybe later during the later you will see the price go all the way down to your take profit, but you will handle all those ups and downs, break it. Just when you are happy with profits, you take profits.
Yeah. But it was a liquidity level, so I took it. My level was at the weekly open, I believe, and also it was the bottom line of that AMRP level. So that's those are calculated ranges. So it was sort of like, but it's still. I mean, it could still just not hit that, and that has been the market lately.
It will
That
take time.
it just didn't. It just did not go to. No, it was so manipulated. They just sort of like take you out. Don't go to the levels they normally do. And that's frustrating sometimes because you think, okay, and I always already put my take profit a little bit higher or lower, just a few points, just to make sure that. But then it still didn't go there. You might just like they can read your mind. You get really like, are you kidding me? So now today was a good day. Today was just, yeah, but we're going quite high now.
I'm looking at it now. I'm starting to.
Yeah.
I'm expecting the sellers to start coming in. They still haven't come in.
Yes.
I'm expecting
1409.
I'm slowly starting to see them now come in.
Yeah, it was a little bit like just from the volume, like we said earlier, like very high volume at the low. So we expect a little bit of retracements, and also it's a Friday, Sam.
It is a Friday.
It's a Friday.
It's one of those days.
You don't want to give back in the last 2 hours. We're not going to do that. We're not going to give any money back.
I haven't got anything to give back. There's no trades.
No, exactly.
It's taking fresh from me now.
So what are your favorite trading days? Do you have any days that you do better than other days, generally speaking?
Probably is, but I haven't really tracked it personally.
My favorite days is Wednesday and Thursdays are the best.
Wednesday and Thursday.
Wednesdays, Thursdays are the best, and especially when I check the markets the calendar and we have news pre-market, like a red folder news pre-market, and it's Wednesday. Most of the time, it's unemployment or something red folder
CPI.
news.
CPI
also.
Yeah.
So red folder news. Yeah, pre-market. When I start my session, I have like a good trending day, so I take a couple of trades. So yeah,
I agree. I have So for me, week 2 and week 3 of the trading month are the best most of the times, and I can have a good NFP could be difficult for me, but sometimes I have a good before the Wednesday I could do well, and then the Friday afterwards. But sometimes I just technically, if I look back at my records, I could still have very good trades, but I might have to cut down a little bit. But then week 2 and 3, and especially Wednesday and Thursday are for me the expansion days. So then I have my good trades. Yeah.
And which quarter is for you the best, like in terms of performance, like Q4, Q3?
Well, not Q. Mostly, I think it's Q2 and Q3. Yeah.
Okay.
But then again, we had a really weird with COVID. That was that summer was quite wild. So that was still Q. I can't remember. That was a little bit different than. I think Q2 and Q3.
Each year is different. For example, normally in this.
I haven't tracked years, to be honest. I'm just thinking like, okay, but I should start tracking that as well. Yeah, I have to just look back a little bit further.
I think for me, it was always around October. Around that sort of time, there was always, I don't know, those months were always good for me.
October?
Like around that sort of time. Like not completely at the end of the year, but just after the summer. August, September, October, like those few months, they were always very good.
For me, it's funny, Sam. For me, the best month well, always it's in Ramadan when I am fasting. I don't have energy, so I take one trade, then I go sleep.
Oh, really?
And then you wake up and then, yeah. So that's what the lesser you do, the better, right? Yeah.
So yeah,
Yeah.
trade once. You have your answer right there.
So
Yeah,
what
just
time do
one
you
trade.
trade then when you do Ramadan?
When I do Ramadan, like I trade like the NY session, just same.
The same, okay.
Like so, yeah, same. Just it's more like I just take one trade. Maybe I increase the lot size a little bit, the contracts, and just one or two trades max.
Are you more focused? Because they say if you're fasting, people get more focused.
Actually, yes.
Mhm.
Yeah.
Interesting.
That's good. So it should be your best month then.
Yeah, it's one of the best months. Like Ramadan, it's one of the best months.
Oh, it
like,
is? Okay, well, that's interesting.
Yeah.
Wow.
Yeah.
Well, that's good.
Wow.
For me, like the summer is one of the, let's say, the bad month, like June, July. But
Dries
this
up.
year, and yeah, last year I noticed that my model, the way I trade is more, let's say, for when there is volatility, like, and trend in market. So I try to work more on range in market. So that's why even now some always telling me, you trade just range in market. But yeah, maybe this year also will be good. But normally, if I will think about last 4 or 5 years, like June, July, sometimes August is let's say the worst performance. But
Yeah.
We will see this year.
Yeah, I mean, obviously, like December, times like that as well. New Year, December, January, they're generally not that good. But that's because half the month you don't even trade, right? Like first 2 weeks of January, generally speaking, most people don't trade. I don't really trade. Last 2 weeks of December, generally don't trade. So your P&L is always going to just be like not as good, just because you got half a month of trading done. So you only got 10 trading days, whereas normally you should have 20 or so. But yeah,
the thing with December, like, it's, I don't know for ES, but NQ, I think it's similar. Like, it's most of the time is trending. If we start December trending, just please don't go against the trend. Just use higher highs and higher low structure, buy and hold.
Yeah.
So December is more like, if it's trending higher, it's continue trending higher. If it's trending, I feel like they are in December, they are giving us, okay, just buy and hold.
Yeah, well, it does move.
Yeah.
But it moves slow. You are right, and there are a lot of holidays. So.
Yeah. But apart from that, summer I never actually found to be that bad, to be honest. I don't know. I know a lot of people is like, yeah, summer months, but for me, I've never really felt it that much.
There's still good trades. I mean, it just depends on it might be a little bit less liquidity, but it's still good. You can still have good trades.
But it might also be because, generally speaking, most years, summer months, I'm on holiday or something. So there's a lot of weeks where I'm just not trading, just flat out not in front of the market. So I don't know. Maybe I don't feel it as much, but.
So what's the weather in London right now?
Oh, believe it or not, it's actually very
Is it
warm.
hot? Well, I'm looking because you're wearing a t-shirt. And what's the weather where you are?
It's very hot.
Also hot. Well, I'm wearing a long sleeve. We have winter now, and winter is not that cold, but I'm just used to over 25 degrees. And for me, when it's 20 degrees, it's cold for me. So I'm like sitting here and I'm like with my long sleeves on. I'm like, oh yeah. And daytime is still sunny and still warm.
It was 28 degrees here today. Tomorrow it'll be 30 degrees. Now that is warm. Don't get me wrong. That is warm, but it feels a lot hotter here because our homes in the UK, they're not built for hot climate. They're built for cold climates. Exactly. So they trap in the heat. It's all about how our homes don't allow the heat to escape, so inside it can sometimes be like a sauna, especially on the higher levels, right? Like I have a fan, like a big fan blowing on me. I'm sorry if you guys can hear it, but there's just no way I could sit here without a fan right now. Like, but yeah, it is smoldering hot, really like a nasty heat, because the heat just gets trapped, you know.
Isolation, like it's not isolation, I don't know, but it stays like inside.
It's opposite here. They build the houses to stay cool. So when it's winter here, when it goes 15, like say it's a 15 degrees, the houses feel like 10 degrees if you don't have any heater in it. Yeah. So even 20 degrees, I just don't like cold, but if it's 20, it's like, 15 at night in the house. For you guys, that's nothing. That's like, it's still warm. But I'm like, oh my God, it's so chilly here now. I just like it to be warm, like really, like I can just wear my, just a dress and just don't have to change at night. But then again, I mean, it's only 3 months a year. So yeah, I actually moved to this country because of the weather. I moved away from Europe, from the Netherlands. Where are you from, Robert? Robert says it's 17 degrees here. Where is he from? Where are you from?
I think, where's Robert from? I think did he say California? I think at one point you told me it was California, Robert. I might be completely wrong.
Yeah.
I'm sure you said California.
In summer? That's very cold for California.
Central Coast, California.
The central coast of California, really? But that's not normal, right? The temperature for the time of this year. Oh.
So you don't like the weather, Iris, in Netherlands?
No, I don't. No, I don't like.
It's raining a lot. Yeah.
It's raining a lot, and also it is. Well, let me put it that way. I do like it when it's winter when we can ice skate on the canals and stuff like that. But I just don't like when it's just. I prefer it when we had like a heat wave there, and so that's why I just do better. My body is built for. I used to live in Singapore actually when I was a little girl.
Oh, wow.
So I grew up in the tropics, and I never could really adjust. Well, I was 5 years. I was with my parents at that time, so I didn't. My father was sent abroad, and so I grew up in Singapore. So I was sort of like I got used to the heat, and I maybe that's the reason. And I just don't like the spring, like when there's sun and when there's a cloud in front of the sun, it gets cold. You know what I mean?
Yeah.
And then it's like, oh my God! So I just like it when it's hot all the time.
Yeah.
People go crazy. Yeah.
No. I mean, I totally get it. I prefer warmer climates into colder climates. Like I just function better in general.
For me, it's just my body. I think I'm like a reptilian or something, because when it gets cold, I go. Yeah. So how are we doing on the? I see we're going more up again. So
yeah. No, I'm out that trade a long time ago. We were just not stopping. Yeah, I got out ages ago. I'm shocked that area really held well. That area, I mean, I was totally against buying it. I was like, nah, the momentum's not there. I mean, the momentum is there to sell from the sellers. I can't imagine, but the buyers are just, they just came in bit by bit. They kept in strong, but I wouldn't be surprised if they build up and then we get another steep drop soon.
I agree. Yeah, but it's also it hit the weekly open, so it could be that it's just like going back up again. It is still Friday, so sometimes it's hard to read the market. We have we do have a change in the state of delivery. That means like it is bullish now. So I don't know.
Yeah.
It's weird.
I think it's like Sam said earlier when we start the session. It's gonna be just ranging for a couple of hours. At some point, I thought like we are melting down, and then we had big volume at the low retracements again. So I think there is no point now, let's say, to trade, because they will just take the lows, come back, take the highs, come back, take the lows, and then
exactly.
Yeah.
Let maybe I would like. It was a very weird news. I never heard of that Philly Fed Manufacturing Index, that 8:30 news. So I want to maybe share with you the news candle and the trade that I took. I'll just do it because it was a very weird. It was a very weird, and I'll show you on the 15-second chart. Hold on, where's the 8:30? I never heard of that Philly Fed Manufacturing Index.
Yeah, it's
I mean,
one of
maybe
those.
Is
one of
it?
those weird ones. Sometimes
it
it can
come
move
up?
the market or not.
It does. Okay. Well, for me, I don't know if it's. I don't think it's a monthly one because I never really. Okay, Friday 8:30. Let me just.
Really Fed.
Philly cheesesteak.
Oh, it doesn't show the. Hold on. I'll do it on the 1 minute. Otherwise, we don't see the. Here we go. Okay, I'll share my screen. I need to get faster with that. And share screen. Here we go. Boom. A window and not this one. So
There we are.
You see this 8:33 wick here. So this I was already eyeing this in London, and obviously I got stopped. I didn't, I was, and let me see. I wanted to have that trade somewhere around here, but then we had more move into the breaker, and then it was 8:33, and I saw that news, and nothing happened at 8:30. So this is 8:30, and then suddenly we had a move up, and it just did not tap into the end walk, and then it went down, and then it went a little bit. It took this liquidity. Oh, what happens with my screen? I have little blackouts all the time. You see
That's
that?
Right.
Am I still here?
Yeah. You're still here.
Do you guys still see me? Do you guys still see me? Okay.
Yeah, we can see you.
Sometimes my screen goes black, and I don't know what's happening. Okay, okay, good. So here this week goes down, and I just entered it. It is actually not a normal trade of mine, but because of I knew it had to go there, and we were so close, and it just didn't tap it. And then in this candle 8:34, it went out. So it was just I just market ordered in here, boom, and then I took it just to here. It even went higher above it, but I just took it to this new week opening gap, boom. A very weird trade actually, but it was just a news candle trade. Yeah. You would think, they fool you, like they go down, and then you see on the 15-second, you see that if I go to the 15-second, it's just, then it looks like it's going down. But they fooled me too many times with that one. So I just thought, no, let's go in, and then it just goes very fast. That was a really scalp. Yeah, that was my scalp of today. There we go. And would you like to see my 10-4 model?
Yeah, absolutely. Why not?
Okay. So 10-4 model. 10-4 means that the 4 o'clock has not been the 4 o'clock candle has been printed, but it sort of moved away from it afterwards. And let me see, where am I? I'll go. So much information on my screen. 10:22. Okay, so here's the print of the 10 o'clock candle. And the 4 o'clock should be, where's my 4 o'clock? Where is my 4 o'clock? Where are you? There should be a line on my chart. Oh, here it is. It's a purple line here. You see, this is the purple line. It's the 4 o'clock.
Yeah.
So that's automated. So the 10 o'clock was printed here. I entered the first time too soon because I got stopped out here because it was in a macro. So the 950 10 macro is one that I play a lot. So I entered here just around 10, but then it wicked up a little bit and then it dropped down. But because I knew I had still quite a large room to go, I entered actually right somewhere in this candle here on the down, and normally I wouldn't do that, but I knew it would go there. And then, well, as you see, the expansion was all the way in another macro, the 1020 1040 macro that also does a lot of expansions. And yeah, you see it goes much lower, but I just take it here and I just don't even go for a lower trade. So in this case, it's like a market maker buy and sell model, right? You have the buy side, and then here it finishes the sell side all the way back. So that was an obvious trade for me to take.
Right.
So this is the 10-4. So when that opportunity presents itself, it's a massive trade because you have a bit large expansion, and I haven't seen it for quite a while. So today was the day. And yeah, my 10-4. I love you. Yeah. So
sounds like a police code. 10-4.
My 10-4. Yeah. So it's all time based, and yeah, I've got more time based models, but this is my favorite one, to be honest.
Yeah.
Yes, when it presents itself.
Awesome. Oh, that's really good. Well, we've got a few more minutes left on the live session. If there's any comments, anyone who wants to ask any questions, feel free while we're still here. But otherwise, we're off for the weekend.
Yes.
Any good plans?
Yeah, I need to do some shopping at a town nearby. So that's always I have to go there for the first time because I just moved here. And obviously I want to do, we have a wildlife park nearby that's called Schuss. It's not as big as Kruger, but it also has a lot of wildlife. So it's just an hour drive from here. So I'm planning to go there with someone. Yeah.
Very nice.
Yeah, you guys?
I just have a spa day.
Oh yeah, your birthday Sunday. Of course.
Exactly.
Oh, that's
Could be
nice.
pampered.
So Monday you're a year older. Nice.
Sadly, yeah. A
Well,
whole year older.
Sounds amazing.
What about you,
just
Aymane?
me, just going out with some friends, so chill a little bit, not watching the chart.
Not watching. Yeah.
And waiting for Monday. So for me, just I rest for 2-3 hours, and then I remember that market is closed. Okay, we have to we have to wait for Monday.
Are you on the charts when the market opens on Sunday?
No, because like if I am in front of the chart, I will take a trade. So for me, no, I don't watch the Sunday open. Maybe sometimes when I have my alarm and there is maybe a A+ setup, so I put my alarm and then I check just if the price touched this area. But otherwise, I don't like to, because for me Mondays and Fridays are tricky. So if I start bad and I traded Monday and I trade heavy Monday, so what happened is just the rest of the week I try just to get back to break even or even small profit. So that's why Monday if I trade, I'm very careful. So
yeah,
that's
the best way to do it like that.
Robert plays golf. I play golf too. I love golf, but I haven't played a lot since I moved here. So I need to find golfing people here. So, but Robert also plays golf.
Very nice.
Nice. I like one dish in the Netherlands, like frikandel.
Frikandel. I actually don't eat. Yeah, I don't.
It's like is that like meat with like
you're
breads?
Muslim. But you're Muslim.
Huh?
How do you?
No, halal frikandel. Because my family is in Netherlands, so.
But that's not.
So
That's pork in frikandel. It's
no,
pork.
no. But they do it with meat, like halal frikandel. I
Really?
really love it. Yeah.
Is that like almost like a meat with like breadcrumbs in it or something? Like they it's like mincemeat that they, right?
It's actually
It's like a hot dog, big size.
Oh, okay. I got it completely wrong. I'll speak of something else. Okay,
Yeah.
well, no,
That's
awesome.
Yeah.
But yeah, that is time. Well, guys, enjoy your chill session, Aymane. Iris, enjoy going shopping.
Happy birthday. Have a nice birthday.
You also,
for
Sam.
you.
Yeah.
Thank you.
Happy
I'm sure I
birthday,
will.
Sam.
Bye, Robert.
Yeah,
thank you.
Bye-bye,
Take care,
guys.
Robert.
Bye.
Have a great
Take care.
weekend. We'll see you guys
Bye-bye.
Monday.
Bye.
Bye-bye.
Yep.